audit as per notification number 56 by 2019 CT. So this is the day's session today. Now it's my privilege to just introduce our speaker. He is a thorough academician. Apart from chartered accountancy course, he is a company secretary and also a first rank holder of Master in Business Administration from University of Calicut. And he is a speaker whose his specialization is on goods and services tax law. And he has been invited by many commerce and management institutes in India for GST seminars. And he is an advisory and consulting services. He is advising some of the big multinational conglomerates in India having annual turnover of more than 50,000 crores. He has also appeared in the national English channel. I think many of you would have seen him also, both live and recorded. So the day is yours, sir. Hope you all have a happy learning. Hello.
So very good morning to one and all present here. I need some response, very strong response, so that it can be very interactive. Those who are sitting in the back seat, if you can come forward, it would be great. Yeah, ma'am, if you don't mind. So once again, it's a great pleasure and a great honor to be part of this successful program, this workshop on GST, I think, which has been going on for almost 24th batch or 25th batch since from the beginning of GST introduction. So I am very fortunate enough to be part of this program from the beginning, and I am very thankful to all the members and to the institute for continuously giving me an opportunity to share my limited knowledge on this Indian GST law. So let me just make a very clear statement that all of us are students of Indian GST law. Nobody can claim as an expert in this particular subject, considering that it is only a 3 years old baby, and not even 3 years old baby, it is only 2.5 years old baby. So I want this session, I always say that this session should be very, very interactive, so that both of us can exchange our own experiences, whatever the limited experiences both of us are having, that can be discussed, and then we can learn from those experiences. So today's session would be on input tax credit. I have already shared the material to all of you. So I think we can skip the presentation. We can just straight away discuss across the table, and then we can take the session forward. So how am I going to present this topic? So let me just give you the overview of how I'm going to take this session forward. So the first point would be, first we will discuss about the definitions, the basic definitions which are required to understand the input tax credit. I'm not going to deal about the entire definitions which are very, very relevant for the purpose of understanding the input tax credit. So after that we will go and then understand what is the eligibility to take the input tax credit. So there are some eligibility criteria which are being mentioned under section 16 of the CGST Act. And there are some conditions which are required to be satisfied to avail the input tax credit. So eligibility is different, conditions are different. And we will talk about some tax reversal which are required because of some specific provisions under the GST law, which is discussed under section 17.1 and 17.2 of the CGST Act 2017. Going further, we will discuss about the blocked credit, which is discussed under section 17.5 of the CGST Act 2017. And after that we will take up a couple of specified services like job work services, then input service distributor, and then we will talk about banking and financial institutions. So these are specific provisions which are applicable, and then we will talk about that separately. So this is the complete overview of today's presentation, and we will discuss more about now it's almost 2.5 years since the introduction of GST. So all of us are aware of the basic provisions, at least no need to be an expert in that particular field. At least we are at least aware of the basic provisions. So what I will do is I will share a couple of my limited experience or exposure to this particular subject, and then we will discuss about the provisions accordingly. That is how we are going to deal with today. So all of you are okay with it? All of you are okay with it?
Yes.
Yes, sir?
Yes.
Yeah. So the first point is, with respect to, let me just get into the topic directly. The first point is input tax credit. So I just wanted to know what you mean by input tax credit, if you don't mind. No problem. There is nothing like, as I said, still we are all learning. Even, all people are learning the GST law. Nobody is an expert. I am not expecting the definition as such because we are not robots, right? So you can talk about whatever the limited knowledge which you are having, no problem. What do you mean by, input tax credit?
Input tax per se is the tax on the inputs which you use.
Absolutely correct.
The credit of them.
Absolutely correct. Any other views? Input tax credit. He says that it is a credit on input tax. Correct? Basically that's what you're saying. Yeah. See, the section 2 subsection 63 of the CGST Act. I'll repeat because this is very, very important. 2 subsection 63 of the CGST Act 2017 defines input tax credit means credit of input tax. That's all. It's a one single line definition. Credit of input tax. So you're absolutely right. You already know the definition now. Now, so it's only one line. So, but the crux is in input tax. What do you mean by input tax? Credit we understand, but what do you mean by input tax? So, input tax has been defined under section 2 subsection 62 of the CGST Act, which defines that input tax means input tax in relation to a registered person means CGST, central tax, SGST, UTGST, IGST charged on this registered person. And it further went on and says that it includes tax IGST paid on import of goods. So there are a couple of inclusions over and above the input tax charged. What are all the inclusions? 1. IGST paid on import of goods. Second, tax payable under section 9.3 and 9.4 of the CGST Act 2017. These two sections, all of you are aware that these two are related to reverse charge mechanism. And again, 9.3 and 9.4 of the SGST Act 2017, that is also with respect to reverse charge mechanism. 5.3 and 5.4 of the IGST Act, that is also on reverse charge mechanism, and 7.3 and 7.4 of the UTGST Act, which is also on reverse charge mechanism. So we have CGST, SGST, IGST, UTGST charged on us when we procure the goods or services, and it further went on says that they added 5 items that they said these 5 items are included. What are all these inclusions? Import of goods, IGST paid on import of goods, and tax payable under reverse charge mechanism under 4 statutes. One is CGST, SGST, IGST, UTGST. That's all very simple. And it went on further, it states that tax paid under composition levy will not be considered as an input tax credit. So this is the whole discussion or whole definition about the input tax credit. Input tax, and we discussed about the input tax credit also. So can I ask you a couple of basic questions? So this is the complete definition. There is nothing else which I left out. So my first point is, as I ask every time, is compensation cess is an input tax credit? Compensation cess. Is it an input tax credit? I want an answer. Because I read out the definition, right? If you want, you can look at your PPT also, the material which I shared also. Input tax credit definition we have already discussed, where compensation cess I didn't discuss, right? So compensation cess, is it an ITC as per 2 subsection 63, read with the 2 subsection 62 of the CGST Act 2017? This is my first question.
No.
No? Absolutely right. It is not there. As long as it is not there, it is not an input tax credit, because we are all chartered accountants. We know very well that if it is not defined in the Act, it is not defined. That is the intention of the legislature, and then we will go with that. So please understand, compensation cess is not an ITC. Make it very clear. Now, the second question will be automatically, this compensation cess is applicable in almost all industries. Not almost all industries. Some of the industries where the compensation cess is applicable. Say for example on motor vehicle, it is applicable. On tobacco product, it is applicable. Now the question is, assuming that a dealer of motor vehicles receives the vehicles, he will receive with a compensation cess. When he sells it with the compensation cess, can the dealer set it off against the outward liability of compensation cess? Whatever the compensation cess which he received, can it be set off? Because it is not an ITC, can it be set off?
It cannot be.
It cannot be set off. This is fundamentally, it cannot be set off. This is the general understanding which we should have. Now, but what happens is, though it is not an ITC, section 11 of the Compensation Cess Act gives the privilege, or gives the right, not the privilege, it is in the Act. So it is a right given to you. Section 11 clearly says that if there is an outward liability as far as the compensation cess is concerned, whatever the inputs which you have received, you cannot even call it as inputs, but whatever the compensation cess which is lying in your credit ledger can be used to set off the outward liability. Is this clear? Now I have a couple of other queries. See, tobacco industry, all of you are aware, right? There is a tobacco industry which is almost 5,000 crores is the turnover exclusively from the export of tobacco. Okay, mainly we export to China. So when somebody exports the tobacco to China, and there will be input tax, the compensation cess will be lying in their credit ledger. Agreed? Because when they are procuring also, compensation cess is applicable, and when they are exporting, it becomes a zero rated supply, right? Now, this tobacco company has to apply for a refund under section 54 subsection 3 of the CGST Act 2017 for refund. Section 54 subsection 3 clearly states that you can go for refund in two scenarios. One is zero rated supply, that is nothing but your export of goods or services. Second, supply to SCC. These two cases you can apply for a refund. But the definition, the provision starts like this. You can apply for a refund of accumulated ITC. Again we have a problem here. Compensation says, can they apply for refund? Is it an ITC? Because it clearly says that accumulated ITC can be claimed as a refund. My fundamental question is compensation is it an ITC? It is not an ITC. So you will not be able to take the refund also. But again the government understood this flops in this drafting of the law, or whatever it may be the case. They have given a relief by way of a circular. They issued a circular and said that yes, we understand, we will give you the refund of compensation cess also. So it is, the refund will be eligible, you will be eligible for refund of compensation cess in case of refund under section 54 subsection 3 of the CGST Act. Not because it is satisfying the criteria as laid down for the input tax credit definition, but it is merely because of a circular issued by the department. So is that clear? So we have further issues also in the definition. There is some form called ITC01. There is some form called the transitional credit. All of you would have filed a transitional credit at the time of transition, when we are moving from the old regime, that is existing law, to GST law. So when you are filing transitional credit, are you eligible to take the credit of the transitional credit which has come to your credit ledger immediately after filing this form? Is it an input tax credit? Is it an input tax credit? It is not an input tax credit at all. It is only by way of filing ITC 01, transitional credit, Tran 1, it has come to your credit ledger. So, I will give you an example where these definitions are very, very important. Let's understand why we are talking about this transitional credit or Tran 1 or ITC 01, 02, all these forms, where is it relevant? I'll give you an example. One of our client is already in the inverted duty structure. Okay, that means their outward liability is falling into 5%, but their inward liability, that is whatever the inward tax which they are paying it at 18%. Okay. Now under old regime also this was the same scenario which was continuing, and in many cases they are importing the goods also. So they had a transitional credit at the time of 30th June 2017. They had a transitional credit. They filed a Tran 1 and it got credited to the electronic credit ledger. Very good. And the inverted duty structure continued in the GST regime also. Now the company has applied for a refund stating that we are eligible for inverted refund under section 54 subsection 3 of the CGST Act 2017, considering the fact that we are falling under inverted duty structure definition. So they applied for a refund. They claimed including transitional credit. The PO, the proper officer, has rejected the application stating that transitional credit is not falling into the definition of ITC, hence we are rejecting the transitional credit. We will give you only the accumulated ITC. They underline the word ITC. So transitional credit, even if it is there, you can use it. There is no restriction as far as the ITC for the purpose of payment. There is no restriction for that. But when it comes to the refund, there will be some issues. So far there is no clarification issued as far as this particular point is concerned. Now second point, there are credits which can come into your credit ledger by way of filing ITC 01 and ITC 02. What is these two forms are all about? ITC 01 form is a form which has to be filed in 4 scenarios. What are all these 4 scenarios? Section 18 subsection 1, clause A, clause B, clause C, clause D. These 4 scenarios you have to file ITC 01 so that the credit can be availed by way of filing this form. What is this 18 subsection 1, clause A, clause B, clause C, clause D? Clause A talks about compulsory registration. What do you mean by compulsory registration? All of you are aware that as per section 22 of the CGST Act 2017, the moment you cross the threshold limit, whatever it may be the threshold limit, 20 lakhs, 10 lakhs as the case may be, or now 40 lakhs as the case may be in case of supply of goods. So in all these scenarios, when you are crossing the threshold limit and when there is a compulsory registration required, when your aggregate turnover crosses the threshold limit, then you are liable to get it registered under the CGST Act 2017. Now what happens? When you are getting it registered, assume that you are a trader. You would have procured some goods already, right? You would have procured some goods already which would be lying in your credit ledger, correct? Where is a credit ledger when you are not registered? Correct? So you be very, very careful. Sometime I will deliberately make a mistake just to understand whether you are looking, whether when I am making a mistake, whether you are seriously looking at me or whether you are still continuing with the same rhythm. So there is no credit ledger when you are unregistered. The credit ledger will come only when you are registered. Okay. So assuming that you are a trader, you bought some stock, and then subsequently your turnover crosses 20 lakhs or 40 lakhs as the case may be. Now you are liable to get it registered. So now government says that you can avail the input tax credit of the stock lying in your lying in your inventory register, whatever the inventory which you are having, you can avail the credit. Now my fundamental problem is, how do I avail the credit? Because normally we understand that to avail the credit, the other party has to file his return, it has to come to my credit ledger, the invoice should have all the GST number, place of supply, all the particulars which are required. But my invoice is, if you look at my invoice, my vendor's invoice, nothing would have been mentioned, right? Because I am an unregistered party, so my GST would not have registered. Now if I go back and then tell him, sir, please correct your invoices, he may say that I will not be able to do that. So government understood this issue. Government said, no problem. You do one thing, you file ITC01. You mention all these invoice numbers, everything based on these original invoices which are in your possession, file ITC01 and then avail the credit. So assuming that my credit ledger is having say 2 lakh or 3 lakh of credit based on my computation, then I can file ITC01. The moment you file ITC01, the credit will come to your credit ledger, electronic credit ledger. Now ITC01, the credit ledger amount has come to credit ledger. Now whatever I am going to talk about under section 18 subsection 1 clause A, B, C, D, there is a time limit for availing the credit. Government said they put a restriction under 18 subsection 2 of the CGST Act and said that I will not give you all credit. I will give you the credit lying for the invoice dated up to the period of 1 year. So assuming that you are liable to get it registered today is 8th of January 2020. You will be eligible to take the credit of stock lying in your credit ledger for the invoices which are dated on or after 9th January 2019 only. Is this clear? So only 1 year only you are eligible. Don't ask me why that 1 year restriction. Government wanted to put a restriction. They clearly put it into section 18 subsection 2 of the CGST Act. Now when we go to the clause A, we mentioned that it is a compulsory registration. 18 subsection 1 clause B says that voluntary registration. In case of voluntary registration, you are not reaching the threshold limit, but you wanted to get it registered yourself. Say for example, your turnover is only 15 lakh. You wanted to get it registered now itself. I don't want to wait for 20 lakhs to happen or 40 lakhs to happen. I wanted to get it registered now itself. So it says even if it is a voluntary registration, you can file ITC01. And the third scenario is when you are filing when you are a composition dealer, become a taxable person. That means person paying tax under section 9 of the CGST Act 2017. That means normal taxpayer, not a composition taxpayer. So when you're a composition dealer, when you're paying tax under normal section 9, normal tax payable scenario, then under section 10 of the CGST Act, when you're a composite dealer, you are not eligible to take the credit. Now the government says that because you moved from composition dealer to a normal registered person, you are eligible to take the credit. You file ITC01. The last scenario is you are continuously doing exempted supply only, and you now started doing a taxable supply. When you are doing only exempted supply, you are not eligible to take the credit, because if you are doing only exempted supply, section 17(2) of the CGST Act, 17(2) of the CGST Act, read with rule 42 and rule 43 of the CGST rule 2017 as amended from time to time, will restrict or will prohibit you from taking the credit if you are doing the exempted supply exclusively. Now the government says that no problem, if you are doing exempted supply at the time of purchase, you are not eligible to take the credit. Now I will permit you file ITC01 and then take the credit. Now clause A and clause B, compulsory registration, voluntary registration, you are eligible to take the credit by filing ITC01 only for stock lying in your books. Only for stock in the first two scenario. And third scenario and fourth scenario, that is exempted supply become taxable supply, composition dealer become normal tax payable person. Now in these two scenarios, you can take both stock and capital goods. Please note, first two scenario only stock is eligible, whether it is in the semi-finished goods or in the finished goods. In the second scenario, that is clause B, C and D, you are eligible to take both capital goods and stock. Input services you are not eligible. First point. Second point is there is a time limit which is prescribed. So you have to be very, very careful. Now second question would be, by filing ITC 01, will it be reflecting in my credit ledger immediately? Yes, it will be reflecting in your credit ledger the moment you file ITC 01. So now we understood from where the ITC 01 form comes, right? Now assuming that I filed ITC 01, I got some credit, will I be able to take the credit of this, or will I be able to, I can use it, definitely I can use it, let me make it very clear. This whatever credit comes by way of filing ITC 01, 02 or for that matter transitional credit forms, you are eligible to utilize for the payment of your outward liability. But in case you are applying for a refund, the department officials may reject your application considering the fact that it is not an ITC because it is not satisfying the definition of ITC. So this is what I wanted to tell you. Now the fundamental question which will be asking you is, how do I identify the input tax, the inventory lying in my books of accounts? How do I take it based on the what method I should apply? So the government understood this also. They said you apply FIFO method. FIFO method, first in first out. So whatever left out in your books of accounts, that you take it based on the invoice date, apply FIFO method for this particular purpose. Now ITC 01 form, you got the credit. Now let's understand what is ITC 02 form. This ITC 02, yeah.
Capital goods credit also for 1 year?
No, see, capital goods which are purchased for the last 1 year, within last 1 year only you are eligible. But when you ask the right point, as far as capital goods are concerned, though time limit is 1 year, you are not entitled to take the entire credit. Say for example, when I purchased 1 year before, within the due date, that means maybe 30th of January 2019, I purchased a capital goods. But there is a restriction which is put it on this particular capital goods. What is that restriction is all about? You are not entitled. So for example, I purchased 1 crore of machine. On that 18 lakhs is the GST. Now the government says that I will not give you the entire 18 lakhs. On a quarterly basis, you have to reduce the value. How do I do it? You have to apply the respective percentage and then reduce the value, and then you can take it. So there is no major complication because reduction will be happening because it's only for the 3 or 4 quarters, not for the entire 5 years. Because what happens, if it is more than 1 year, you are not eligible because of 18.2 of the CGST Act. But if it is within 1 year, there is some calculation to be done in order to avail the capital goods credit. Now what is ITC 02? ITC 02 is a form which has to be filed at the time of merger, acquisition, amalgamation, all these scenarios. So I will give you one practical examples which we are fortunate enough to handle recently. This company is a bearing manufacturing company which is located in Oragadam. It's nothing but Sri Perambuttur. And they have a trading company also. Both are different entity altogether. Both are having separate PAN altogether, PANs. But both are controlled by a group company which is located in Japan. Now, due to various business reasons, the manufacturing company was running in loss and the trading company was running in profit. They decided to merge together. With effect from this happened exactly on 1st of April 2017. Now the merger application has been filed with the company law board, and the order has come on 1st June 2018. These dates are very, very important. 1st June 2018, the order has come. So as far as this application is concerned, the moment you file with the company law board, that will be considered as deemed to be accepted. So for 17-18 financial year, they combined the financial statement of both the trading company and manufacturing company. So there is only one single financial statement which is available for this particular entity during 17-18, but they have 2 registrations. Actually speaking, trading company had 5 registrations in 5 states. This manufacturing company had 4 registrations in different states. Now both got merged, and for 17-18 it became one single financial statement. Now because this order has come with effect from 1st June 2018, they were waiting for the the order from the company law board, and then this has been done. After that, now the company, the merging company, that is the manufacturing company, can file ITC 02 so that the merged entity can avail the credit. So how does this process happens? The merging entity has to prepare the list of credit, whatever the credit which is lying in their electronic credit ledger, they have to prepare that. That has to be approved or certified by a chartered accountant if it is above 2 lakhs. So that has to be certified by a chartered accountant, and you have to verify whether they are actually eligible to take the credit under the old regime. If they are not eligible to take it under the old regime, then there is no concept of transferring into the new regime. So you have to be very, very careful. So that amount you have to certify, and you have to, whatever the certification you have done, you based on that, the merging entity has to file ITC 02 online. Now it will come to the merged entity online. If you look at it, they can accept it. Once they accept it, automatically it will get credited to their credit ledger. Now first problem which we faced is 2A is a flexible document, correct? Today if I take my credit, it would be say 1 crore. Tomorrow if I take it, it would be 1 crore 18 lakhs, because people have the right to revise their GSTR 1. Whenever they revise their GSTR 1, credit also were undergoing a change. So the problem which we faced is, we filed the ITC 02 for this company, and after that around 1 crore of creditors again came to the credit ledger. Now the fundamental question is, can we file ITC 02 twice? So what we did is, we said this is a peculiar case which have not dealt by anybody within our limited circle, and second is, there is no precedence to this particular issue. Let's have a discussion with a couple of government officials. Obviously they said they are also not aware of this particular provisions. Obviously there is no restriction as far as the GST Act is concerned. There is no restriction. So we said we will try our level best to take the credit. Now we filed the ITC 02. Before that we told to the company that law doesn't prevent, but portal will decide what should be the law. Generally that is the scenario, right? Ultimately, whatever the GST law says, when you go and then do it in your system, if that doesn't allow you, then it is gone. So the law, GST law, ultimate decision maker is GST portal, not by the authorities. Even it will not reach to the authority also. So we said, there is a problem like this. This guy may prevent you from taking the credit. Who is this guy? Portal guy. So ultimately we filed, it went through, and the credit also reached. So with that limited experience, we understood that ITC 02 can be filed twice also. So now ITC 02 form has come to the merged entity, right? Now the point is, again, if they wanted to apply for a refund, will they be able to take the credit based on this ITC 02? Again, would be a subject matter of litigation. So point is, what my ultimate point is, as long as it doesn't satisfy the criteria or the criteria which are prescribed under the definition, it cannot fall into the definition of ITC. But the problem comes not at the time of setting off against your liability. The problem comes when you apply for a refund. The department may reject it, saying that it is not an accumulated ITC. So far no clarification has come except in case of compensation cess. So these 3 forms, if there is any credit, because we already burned our hands in transitional credit form, so we extrapolate the same scenario to these 2 forms also. So this may be a subject matter of litigation at later point of time. Okay, because this transitional credit case also, we are looking for an alternative ways to solve this issue, because the credit which has come by way of transitional credit is almost 54 crores. So how do we take the credit? It is accumulating, keep on accumulating. There is no refund which there is no way of coming out of this particular issue, because already I am under inverted duty structure. So already I am applying for refund for the present one. Then where is the concept of how do I utilize this 54 crores? There is no way at all. So we are arguing, saying that this is a right given under the old act, because the input tax credit is given under the act, SENVAT credit rules, SENVAT credit, and also that it has come through the act, it's a respective act. So act is a right, rule is a privilege given to you. Right cannot be taken away. Rules given by the department by way of privilege can be taken away. So this is a settled legal provision stating that right cannot be taken away. So the input tax credit has come through the act, which is a right, so it cannot be taken away. This is the argument which we are looking for future litigation as far as this particular point is concerned.
There are no convincing case laws on this?
No, nothing, because GST is a new, still
For all the ITES companies, this would be a big...
Absolutely. That is what I am saying. This is already we faced a couple of issues where department is very clear. I will not give you the refund. You tell me how is it satisfying the definition of 2 subsection 63 of the CGST Act. So we were, we explained, but obviously these kind of act is a right, but rule is a privilege. These arguments and all will not stand in front of an assessing officer. All of you will appreciate it, right? This will be settled only in the tribunal or in the High Court only, not in the, even in the commissioner level this will not stand. Legal points and all will not stand in front of the assessing officers. So we will see how it going forward, we will get a case law in future, because it's a huge amount. So if it is a 2 lakh, 3 lakh, ITC 01 also I am not seeing that big amount, because maybe in first 2 scenarios I am not seeing any big amount because it's a voluntary registration, compulsory registration. But in case of 3rd and 4th scenario, exempt and composite dealer and all, there probably the accumulated credit would be more. So again, people have to explore some possibilities in order to get the refund. Now, ITC 01, 020, what is 03? That we will discuss little while later. Now, ITC 03 form is very, very simple. It is actually for the purpose of reversal of your credit. Say I told you, when you are moving from composition dealer to the normal taxpayer, you can avail the credit, right? Now the ulta of that, when a taxable normal taxpayer person who is paying tax under section 9 of the CGST Act wanted to opt for composition dealer under section 10. So at that time, whatever, then he will not be able to take the credit. Composition dealer will not be able to take the credit. At that time, he has to file ITC 03 and reverse all the credit which is lying in his credit ledger. So after that, he will not be able to take the credit. If the same composition dealer wanted to convert into section 9 later point of time, section 18, subsection 1 will come into the picture. Again, he can file ITC 01 and then take the credit. So, is this clear? Now the last point is ITC, yeah.
There's no compulsory registration.
Yeah. Correct.
I'm having a stock as capital goods.
Yeah.
I'm moving to stock to capital goods. I'm moving.
Yeah.
Scenario 2, from capital goods to stock I'm moving. In that case, how you can?
Yeah. I'll repeat the question for the benefit of everyone. Sir is asking, when I have a couple of stocks, I'm converting the stock to the capital goods. Okay. And from capital goods, the second scenario is I have some capital goods which I am converting into stock. See, very simple. When you have couple of machinery which are used for the purpose of future revenue generation, then we will generally capitalize it. Assuming that we decided that it doesn't have any kind of future benefit and we decided to sell it off, and when we are moving to the stock, then what will happen? That is your basic question, right? As far as the input tax credit is concerned, at the time of availment, there is no difference between capital goods or inputs. That means when you are availing, there is no difference. The problem comes when you are converting from capital goods to the stock. What is the problem which will come? What will be the problem? Can anybody throw some light on this?
Valuation.
Valuation problem, yeah.
Depreciation may be.
Depreciation maybe.
Already utilized the
You already utilized it. See, as far as the utilization is concerned, not even utilization, as far as availment is concerned, no issues. The GST law does not differentiate inputs and capital goods as far as the availment is concerned. You can avail 100%, no problem. Now, the problem comes at the time of reversal. Reversal, when it comes to reversal, rule 42 will come into the picture and rule 43 will come into the picture. 42 is for input and input services, 43 for capital goods. Now, because I am moving from capital goods to the stock, my workings accordingly will undergo a change. This is first impact. Now, I will ask you one more question. Because I am moving from my balance sheet fixed asset to stock, because I am moving from fixed asset to stock, will there be any other impact as far as input tax credit is concerned? That's the second question, right? First question we said reversal if it is there. Say for example, I am doing some exempted supply and taxable supply. Definitely section 17(2) of the CGST, subsection 2 of the CGST Act read with rule 42 and 43 will come into the picture. At the time of reversal, definitely you have to differentiate both capital goods and stock. That is nothing but inputs. But at the time of conversion, when you are converting from capital goods to stock, will there be any other impact? There is no other impact as far as moving from converting a capital goods to a stock. Because you already availed it, you have to look at it from the conversion point of view. What is the conversion point of view? Already you availed it. Yes, you availed it. Now when you are availing, have you satisfied all the criteria listed out under section 16(1) and 16(2) of the CGST Act? As long as you are satisfying those criteria, no issues. Now this point would be very, very important as far as income tax is concerned. At that time there are some tax implications. Now, taking that into the consideration, when you look at from GST perspective, there won't be any tax implication. There won't be any tax implication because you already availed. There is no reversal happening except in case of 17(2) scenarios. Okay, clear, sir? Okay. Now, next point is we will take couple of other definitions. We have not yet moved from definitions. Anyway, we are covering as long as it is coming into the definition point, we are taking up all other issues. Now, next three definitions are what is inputs, input service and capital goods. What we have seen is input tax. Now, the second point is, second definitions which we are going to handle is what is inputs, input service and capital goods. Inputs definition has been, inputs have been defined under 2 subsection 59 of the CGST Act, which states that input means any goods other than capital goods. Any goods other than capital goods. So it's a miscellaneous bucket. Whatever not falling into capital goods definition, it will automatically come and fall into inputs, provided it is a goods. Now, what is capital goods? Capital goods have been defined under 2 subsection 19 of the CGST Act 2017, where it states that capital goods means goods, please note the word goods, which are capitalized in the books of accounts of the person who claims the input tax credit and which is used or intended to be used for the purpose of business. So that used or intended to be used for his business is a standard definition words which are there in all three input service and capital goods definitions. Now, I will give you a couple of issues which we faced. Before that, let's take input service also. Input service means which is defined under 2 subsection 60 of the CGST Act, where it says input service means service which are other, obviously any service which is anything which falls into the service category will fall into input service. So the provided, so that is also miscellaneous bucket. What happens? Anything which is not a goods, anything which is not a capital goods, if it is a goods, will fall into inputs, and if it is not a goods, it will fall into the last bucket, input service. So we have 3 buckets. One is input, input service and capital goods. Okay. Now, is there any difference between why are we talking about this differentiation too much? Because we all aware that at the time of availment there is no differentiation between capital goods or anything like that. You can avail it in the first year itself. Under the old regime we had some issues, 50% or some installments, depends upon the state VAT laws and all. Now everything you can avail it at the time of receipt of goods itself, the purchase itself. Then why are we differentiating input service and capital goods? See, there is no difference at the time of availment, but the difference comes at the time of reversal, as we discussed a few minutes back. At the time of reversal, you have to clearly identify what is input service and capital goods. And at the time of refund, you are not eligible for refund of input service and capital goods, you are eligible for inputs. So, if you look at the entire GST law gamut, you can see that there is a differentiation which are applicable for input service and capital goods. Now, I will give you another practical example which we faced. A company, now I want you to help me out to solve this problem. Okay, so this should be definitely, I am expecting some reply from your end. So be very, very careful. Those who are sleeping, please get up. Those who are wearing specs, especially those who are wearing specs, please get up, because they are the dangerous people. I always say, what happens? Because of specs, I can see the glaring only. I cannot see their face, the eyes actually. But at least those who are not wearing specs, I can see the eyes. So those who are wearing specs, I don't know whether they are actually sleeping. I can sometimes see that they are smiling, but sometimes they are nodding their head. But I don't know whether they are actually is it coming out of sleep or is it actually after understanding the provisions. So this company is a manufacturing company located in Sri Perumbudur. So this company purchased one machinery from Toshiba, which is located in Haryana. Okay, so this machinery, it is a capital goods. They wanted to capitalize it. The value of the machinery is 3 crore. And the GST applicable on that particular machinery is 18%, which is nothing but 54 lakhs on 3 crores. Okay, we got an invoice. Now my point is, when you are purchasing a capital goods, there is something called transportation charges. I have to bring that machinery from Haryana to my Chennai factory. Second point is, there will be some installation and commissioning testing charges which will be charged by the Toshiba. I will give you 2 scenarios. First scenario is, both installation, commissioning, testing charges and transportation charges are entered into a single contract, then no problem for me. It will be considered as a composite supply. As per section 8 of the CGST Act, we will apply the SAC code of the machinery and we will charge 18% on the entire amount. Say for example 10 lakh for transportation, 10 lakh for installation and commissioning, no problem for me, I can take the credit. Now my second point is, assuming that as per the contract, I am saying that you supply goods only. I will arrange my transporter and I will bring it. Then it will be a separate SAC code. My transporter will give me a invoice for the service. And assuming a scenario, generally it won't happen, but assume for a moment, installation, commissioning and testing is done by not by Toshiba, but some other party who charges me 10 lakhs. Now tell me, at the time of capitalization, can I capitalize the service of transportation and the installation commissioning charges of 10 lakh each? Can I capitalize it? As per Companies Act? As per income tax also? But let's look at the definition. Come back again to the definition and see what is capital goods? Goods which are capitalized, right? Tell me whether transportation charges and installation commissioning charges are goods or service. In case of individual supplies, I am not talking about composite supply, I am talking about individual supply. Is it a goods? Yes or no? I want your answer. No, right? Absolutely no. So will that transportation charges be considered as capital goods? But how do you maintain it in your books of accounts? If we go to the clients and say that no, this is not goods, it is actually service, so it is not falling into the definition of 2 subsection 19 of the CGST Act as far as the capital goods is concerned, client will say, then how do I maintain this books of accounts? Because already we have income tax actor, we have companies actor, already there is a difference between the capitalization. Now you are bringing GST and saying that not only on the legal aspect, but numbers also you should keep it separately. Service you should keep it separately, goods separately. So now there is no solution as far as this particular point is concerned. Again I am telling you what is the impact of this, not at the time of availment, but at the time of reversal. This has an impact. Now what should you do? Now you have to at least advise the client. You have to tell very clearly that you maintain it in your SAP, whatever the way you wanted to. You follow Companies Act, capitalization or income tax capitalization as the case may be, whatever you are applying, you please apply. But for GST purpose, you maintain the service component separately if it is not a composite supply. Why? At least tomorrow after 4 year, 5 year down the line, if there is any reversal and demand, at that time you can understand what is the actual service component which are applicable, because for service reversal rule 42 will be applicable and for the capital goods 43 will be applicable. So just keep it in mind. My next point is, I have been keep on talking about capitalization. What do you mean by capitalization? What law you are referring to? Is it an income tax capitalization or Companies Act capitalization? Or some partnership firms, they are having their own law of capitalization, internal policy will be there. What do you mean by capitalization? As per what act? There is a difference between Income Tax and Companies Act, right? For the capitalization. One is ready to use, one is put to use. Up to such scenario you can capitalize. So there are different concepts in Income Tax and Companies Act itself. Now my point is, which law they are referring to? They simply said capitalization, they left. Now the ball is in your court. So don't worry, it's already a settled thing that as long as the law is silent, you can apply whatever the provisions which you wanted to apply. Capitalization provisions. If you are following Companies Act, please do maintain. If you are following income tax provisions, please do that. Or if you are a partnership firm or any other entity, whether you are having your own capitalization policy, please do that, no problem. Now, the issue is on the capitalization, there is no clarification also which has come as on date. So if there is a clarification comes by way of circular, we can understand. But in the absence of circular or anything like that, now you have every liberty to use whatever the capitalization want, you can use it. Now next question. The capitalization, okay, we understood. Second point is, how do we understand the capitalization is done? Now how do we understand the capitalization? From the balance sheet perspective. Balance sheet, we have fixed asset, we have capital work in progress, right? Can I take the input tax credit of capital work in progress? Capital work in progress, sir. So for example, you are in the other case itself, machinery which I purchased, assuming that it is purchased on 31st of or 20th of March, and it reached in my factory, but still it is in progress, not yet capitalized, moved to fixed asset. Can I still claim the input tax credit? It is only a capital work in progress. Can I? Or I cannot? You can. See, capital work in progress, you can avail the input tax credit. There is no restriction as far as the capital work in progress is concerned. Okay. The point is, as long as it satisfy all the conditions which are prescribed under section 16.1 and 16.2, subject to 17.5, blocked credit, and other restrictions which is prescribed, you can very well avail the input tax credit. So there is no restriction as far as capital work in progress is concerned. So all of us are clear on this. So can we move on to the crux of the matter, that is section 16 of the CGST Act. Can we move on? When do you want the break? When do you want the break? Anytime after 15 minutes? 15 minutes? No, if you don't say, I can continue, no problem. Okay, so section 16 of the CG, we will take these two sections and then we will move on. Okay, section 16 of the CGST Act says, 16.1, every registered person is entitled to take the credit of input tax, only they are saying subject to rule, ITC rules. What is ITC rules? Starting from rule number 36 to 45 and subject to payment of tax under section 49 of the CGST Act. So the moment they start, they are putting two conditions to you. I will give you the credit subject to these two conditions. So it's not even condition, it's actually eligibility, but there itself they put two conditions. That is why the rules of CGST rules for the purpose of ITC, rule 36 to 45 are very, very relevant. Because you would be wondering, now recently also they changed the ITC rule 36 sub rule 4 of the CGST rule 2017, where they said, first they said, I will not give you the full credit, I will give you subject to 20% of the, I can give you whatever credit reflected in 2A, over and above I will give you 20% only, I will not give you full credit. So they put a restriction there for 20%. Now with effect from 1st January 2020, they put another condition, not another condition, initially it was 20%, they reduced to 10%. So now all of us are following this rule, but from where they are getting the power to issue these kind of regulations or the rules? It is nothing but it is coming from section 16(1) only. So you may be saying that generally I satisfied all the criteria as prescribed in section 16(1). I am in possession of an invoice, it is getting reflected in my credit ledger, I already received the goods and services, all conditions, I filed the returns, I satisfied all the conditions. Am I eligible to take the credit? No. Reason being not because that you are not satisfying these conditions, because there is a hidden word which they have used. They clearly said subject to the ITC rules. So you have to satisfy ITC rules also. That is very, very important. That is why you are not eligible to take more than 10%. That is why they are able to bring that 10% criteria. Now, what is section 16(1)? Now, subject to this, we will go and deal with this rules 36 to 45 separately. Let's come down and then see what are all the other things which they are talking about. Can you just open that sheet which you are having, the material which I shared? Because that definition, that eligibility is very, very important, because that is a crux and then backbone of the entire ITC provisions. So I want you to go through that very clearly. I think the page number is 14. 14 is the page number. 14 is the page number. Every registered person subject to ITC rules. You can see in the PPT, this is not a color printout. You can see that some of the sentences are in dim color. Actually it is a red color which I highlighted for my purpose for the presentation. Red color or green color as the case maybe depends upon the amendment or the important aspects. Now you can see that ITC rule subject to 36 to 45 and section 49. What is 49 is all about? It's nothing but you have a lot of criterias, right? You cannot simply pay the tax. By paying tax, there are some restrictions, right? For you can utilize only CGST against CGST, you cannot utilize SGST against CGST. These criterias are coming from section 49 only. So, subject to that 49, that also we will deal it separately. Entitled to take the credit, ITC charged on any goods, supply of goods or services or both, which are used or intended to be used in the course of furtherance of business and credited to electronic credit ledger. This is very, very important. And first point is what is mean by, so we are going to deal with the rules separately, payment separately, and that word supplied to him is very, very important. Though that is only a single line to him, very, very important. I will give you another example. One company has one company which is a, so for example, one company has two registrations, one in Tamil Nadu and one in Pondicherry. Their entire administrative office is located in Chennai. Okay. Now, assuming that you are doing a GST audit for the purpose of the Pondicherry unit and the administrative office which is located in Chennai, they are also registered under the GST and you are doing the GST audit for them also. But tomorrow this administrative office is saying that no, you give me a lump sum invoice, single invoice, you invoice to me, I will take the credit. First point, can they take the credit of the audit service which you have done for Pondicherry unit, GST audit? You will not be able to take the credit. Reason being, the word which is used is supplied to him. Under GST law, your branches are different, that registered, each registered person having a GST number will be considered as an entirely different unit altogether, entity altogether, you can call it that way. So, this Pondicherry, say for example, you are charging 1 lakh to Pondicherry audit and 1 lakh to Chennai audit, and these two put together, you are charging 2 lakh to Chennai office. They will be able to take the credit only to the tune of 1 lakh. The 1 lakh credit they are not eligible only and only because of this word to him, which is used under section 16(1) of the CGST Act. Now, I will give you a couple of, so is this clear? 16(1) is clear? Now 16(2), they are giving some conditions, they are putting some restrictions for availing the credit. Yeah.
Sir, if there are multiple branches spread across India,
Yeah.
so how can that auditor raise multiple invoices to each separate branch?
It's a very good point. See, as far as the GST audit is concerned, it is based on the GST registration numbers. So it's not an entity level appointment which will happen as far as GST audit is concerned. Okay, as far as GST audit is concerned, it is a GST registration number based appointments. As far as the statutory audit is concerned, you are absolutely right, that is not possible. In such a case, you have to have an ISD registration and then you have to distribute the credit because it is a common credit which is lying in your credit ledger. Okay, now this is also very important. Yeah.
So that bill will be raised in the GST number of ISD?
Yeah, for the purpose of the company audit you are talking about?
Yeah.
Yes, absolutely, not in Tamil Nadu registration number. I will give you a little more lights on to that particular question. See, for example, generally when we are getting appointed by the companies for the GST audit, their purchase department will send you a invoice, PO, right? They will send you a PO saying that, okay, 5 lakhs is your audit fees. Say 5 branches are there, 5 lakhs is your audit fee, they will fix it, they will send you one PO, that's all. They will not tell you what is a breakup. It is your responsibility to get an LOE, letter of engagement signed, mentioning clearly state-wise number, 1 lakh for each branches. Otherwise, you yourself is getting into trouble. So first you clearly mention what is the agreement, letter of engagement. If PO itself is, they are able to give it as a different branch-wise, well and good, registration-wise, well and good. Otherwise, you put an LOE, letter of engagement, clearly mention what is the audit fees, get it signed from the other party. Even we faced the same issue, madam, where they said, no, we will not, you do whatever the way you wanted to bill it, you bill it. So then we had literally, obviously when we do audit, we will do a letter of engagement first, all of us will do. So there you clearly mention what is the fees for each branch and then raise it accordingly to each branch separately. As far as audit fees is concerned, statutory audit, that is not possible. Or even for that matter, tax audit, that is not possible. But stat audit and statutory audit is not done for it is done actually for the entire unit. So it has to actually come to the ISD and then distribute it. Otherwise, Chennai office, if it is the registered offices in Chennai or the corporate offices in Chennai, you are getting an audit fee bill and the service is actually done for other branches also. So from Tamil Nadu state, if there is a department audit, they will definitely say that take out all your common credit, reverse it. So this issue will come up sooner or later. So be careful with that. So shall we break for tea? I think 11:20. Okay. So we'll come back and then we'll continue. Thank you. Any other document as prescribed? What are all the other document as prescribed? Point number 1, bill of entry. When you are importing, you can avail the credit based on the bill of entry. Point number 2, ISD invoices. ISD, input service distributor invoices, can also be considered as a tax paying document. Third one is, you can avail the input tax credit based on RCM invoice. What do you mean by RCM invoice? RCM invoice is nothing but when I few minutes back I discussed about tax payable under 9394, 5354, 9394 of SGST, and then I also discussed about 7374 of the UTGST Act. In those cases, even if you are receiving an invoice from a party, it is your obligation to raise an invoice from your side, provided the other party is an unregistered party. So assuming that I am getting some services, whether it is a GTA service, whether it is any other service for that matter, if I am receiving and the other party is unregistered, you have an obligation to raise an invoice under section 31 of the CGST Act. It is a self invoice containing all particulars, and based on that only you will be discharging your liability. So many of the cases in the corporate, they would not have done this particular exercise, keeping in mind that they are referring to tax invoice, they are referring to the invoice of the other party. No, if other party is unregistered, it is your responsibility to raise an invoice considering the rule 46 particulars. There are 17 particulars which are being given under rule 46. Based on that, you have to raise a self invoice for RCM. So that invoice also will be considered for the purpose of availing the input tax credit. Now, second point is this invoice. If based on a tax invoice I said you can avail the credit, will all invoices be considered for the purpose of availing credit? No. There is a restriction which is being again prescribed under rule 36 sub rule 2 of the CGST rules 2017, where they are saying that the invoice should have the particulars which I am going to prescribe. They prescribed 5 particulars. GSTN of the supplier and recipient, 1 point. Second, place of supply should have been mentioned if it is an interstate supply. 3, description of goods or services as the case may be. 4, total value of supply, that has to be mentioned. Tax charged. These 5 particulars must be there in an invoice to avail the input tax credit. So whenever you receive an invoice, please do ensure that these 5 particulars are there. Otherwise you are not eligible to take the credit, irrespective of your satisfying all other conditions prescribed under section 16.1 or 16.2. This was a major issue when the GST got introduced. What happened is 36.2 was not the way which I told right now. It was actually, they said all particulars prescribed under rule 46 should be there in that invoice in order to avail the input tax credit. That means every inward supply invoice I should check for 17 particulars. 17 particulars should be verified. It was an awesome, cumbersome task. Nobody can do it. Some cases, see for example CA offices and all, we can do it because in service industry we don't get too much of inward supply invoices. Most of the 40 to 50% of the cost will be towards employee cost only. But you look at a manufacturing company where they will get a 3,000, 5,000 invoices per month. It is an unbelievable task, not possible. Government understood this, and this amendment has come with effect from 4th September 2018. Let me just repeat, this amendment which I prescribed now, right now, which I mentioned, the 5 particulars only sufficient. Government understood this. They prescribed only 5 particulars. This has come from 4th September 2018 by way of a notification number 39/2018 dated 4th September 2018. After that only this 5 particulars. So when you are going for an audit for 17-18, you have to be very, very careful when you are allowing the input tax credit. Please ensure 17 particulars are there. Now you may be asking, it is very, very difficult for us to verify the entire invoices. At least take it on a sample basis, identify it, escalate to the management at least. Tomorrow they will not blame you. Okay, I understand that this is a procedural thing. Government may not take that aggressive view on this particular aspect, but still, as an auditor, it is our responsibility to bring this particular point to the notice of the management. Now, 36.2 is over. Now, as far as tax invoice, as I mentioned, the tax invoice is not alone sufficient. The tax invoice should be in line with Rule 46, and subsequently they said 5 particulars are required in that invoice. Now, I said there are 3 cases, 3 other specified documents also, bill of entry, then IGST invoice, RCM invoice also can be used. Now, second point is, there are 4 conditions. First condition I explained. Second condition is, you should have received the goods or services. You should have received the goods or services. How do you confirm this particular point? How do you confirm the goods have been received? See, first point is you can do a physical verification. Second, you can look at the GRN, goods received note, which is available with the company. You can check the stock register. You can check the FA register. These are all the 4 documents based on which, or even you can check the e-way bill. These are all the 5 documents based on which you can decide whether the company has received the goods or not. Say for example, I ordered one goods. So for example, in the first example which I gave, the machinery which is coming from Haryana to Chennai, the input tax credit can be availed only upon receipt of the goods in my Chennai factory. You cannot take it because I got the tax invoice, the amount has come to my credit ledger, I paid the amount. So nothing is a matter unless otherwise you receive the goods in your factory. So say for example, in many cases the sale will happen on the last day of the month, 31st of March or 31st March. Most of the sales will happen on 31st March only. They will push it for the turnover. So 31st March there is an invoice, but goods would not have even moved from the other factory. So you will not be able to take the credit unless otherwise it reaches in your factory. Now, this is a condition. Now, in that condition, I will give you one more example which has happened with one company. This is a small experience which I wanted to share. What happens is, in this case, a company had this company had presence across all the states in the country, and they had a branch in Pondicherry also. They are into manufacturing of ACs, washing machine, fridge and mobiles, everything. So they decided that after the introduction of GST, when they are moving the goods from Chennai to Pondicherry, they have to pay tax. Because of IGST has to be paid. So there is a working capital issue. So they decided that if the customers are ordering the thing, that means this, dealers like Vivek's or Vasant and Co, these kind of dealers, if they are ordering the goods for AC washing machines and all, they can deliver it to Pondicherry within 2 hours. Maximum 2.5 hours, 3 hours is the traveling transportation time which is required. So they decided, why should we maintain a branch office there? What this company did is they closed down their factory or the branch office in Pondicherry. Now, very unfortunately, they had a credit which was lying in their credit ledger to the tune of 18 lakhs. Okay. Now, they wanted to take out this 18 lakhs. So what cleverly these companies will do, they raised a tax invoice for service from that Pondicherry branch to the Chennai office. Chennai office is the manufacturing unit, everything is in Tamil Nadu, so they raised an invoice to Tamil Nadu. Tamil Nadu took the credit also. We were the advisors of the company. Obviously, all of you are advisors to many of the companies. The advisors, as far as CS are concerned, client will come to you only after taking the decision, just to inform you. Even if you are paid and even if you are an advisor of the company, they will tell you, sir, I already did it. Whether it is correct or not, I don't know, but I did it. I will not ask you before doing it. So most of the cases they will do it after doing the damage. So this company also, after 1 month of this exercise being done, all the credits have been taken, they came and told, sir, we have done this. There is no issue, so we didn't tell you. So I asked, what is the amount? They said 1 crore invoice has been raised from that branch to the Tamil Nadu branch. So I said, do you have an employee there? They said, no. Do you have a branch there? Sir, we closed everything, sir. Do you have any sale from there? No, sir, goods are not there, but credit is lying in their credit ledger. Then I asked, what is the service which is received by state of Tamil Nadu? They said, consultancy charges. So who will provide consultancy charges? Nobody is there. So it is a bogus transaction which is done by, bogus means without their ignorance. With their ignorance or without their ignorance, that is up to the company to decide. But they have done this exercise, so we clearly told that you are not eligible. That means Tamil Nadu state is not eligible to take the credit. Reason being, you have not received the goods or services. Then how can you take the credit? So obviously when you say these kind of explanation, what would be the first question which will come from the client? Sir, we are doing 15,000 crores turnover in the state of Tamil Nadu. Tell me, how are they going to find out this single 1 crore invoice? This would be the first question, right? All say, I done it, sir. How are the department going to find out? So we clearly states that, sir, I don't know how the department is going to catch, but once they catch, then you are gone. Section 73 will not be applicable to you. 74, because there is a fraud or willful misstatement or misrepresentation of facts, you are gone. Penalty will be there, and you have to pay tax also. And it is very simple. This company is mainly into goods sales and all. When there is a sudden invoice from Pondicherry for 1 crore, which has not happened for the last 30 years, suddenly when it comes, obviously this will open the ears of or the eyes of the department. So this is very simple to identify also, but when we as a professionals, when we give, we say that it is not in line. Obviously after 3 months only they reverse that credit due to the communication with their other team of finance people. Finally they reversed it after having a long discussion. Now goods received is a mandatory condition. Now goods received, in some cases I will not receive the goods in my factory, but still you are eligible to take the credit. What are all those scenarios? There are 3 scenarios where you need not even receive the goods in your factory. Point number 1, if you receive the goods in your job worker place. I will give an example. I am located in Sriperumbudur, Chennai, and I am asking my vendor who is located in Mumbai to send the goods to my job worker who is also located in Mumbai. Then the date on which my job worker in Mumbai receives the goods, I am eligible to take the credit. I will repeat, I need not even receive it in my business premises. I can receive it, I can take the credit even if my job worker receives the goods, because all of you will appreciate that it is a prudent decision to transfer the goods from Mumbai to Mumbai rather than coming to Chennai, taking the credit, sending back to job worker and then sending back to Mumbai to Chennai is not a prudent decision making. So government understood this, gave a relief to this. Second point is in case of import. One of our clients' case, what happens is company is located in Chennai. Sorry, company is located in Chennai. They import into Mumbai port. They imported the goods to Mumbai port. Their customers are located in Gujarat. Now tell me, for availing input tax credit on import, do you want me to receive it in my Chennai port directly or in my factory directly and then I have to send it back to Gujarat? No. In case of import, doesn't matter. They say in case of import, the moment you receive the goods, the moment you import the goods, you can avail the credit irrespective of your receiving it or not. You may be sending directly to your customer place in Gujarat. So it doesn't matter. You are still eligible to take the credit. Third scenario is bill to ship to transaction. Yes.
Which is the date that will be considered there?
For the import, the bill of entry date. So third one is bill to ship to scenario. In bill to ship to scenario, what happens? Same scenario. I am located in Chennai. My vendor is located in Mumbai and my customer is also located in Mumbai. I will tell my vendor, please do ship to, bill to me, but ship to Mumbai. Again, in such scenario, the goods cannot come to Chennai and then send it dispatched to Mumbai is not a prudent decision. So bill to ship to scenario also, these exemptions, these 3 cases, you can avail the input tax credit the moment the job worker receives or import has happened and finally it reaches the place of the other party, the customer premises. So these 3 scenarios you have to keep it in mind as far as the goods receipt is concerned. And the third point is, which is very very important, the first 2 conditions and last condition as far as the registered person has to satisfy. The fourth condition, third condition I will take it, fourth condition is he has to file the return under section 39 of the CGST Act. 39 is nothing but form 3, GSTR 3 or 3B as the case may be. Initially it was 3, now 3B is your GSTR 3B is your return under section 39, which they have given a retrospective amendment. Now 1st July onwards, 3B is your 39 return. So you should have filed 3B to avail the credit. So these three conditions are to be satisfied by the registered person who avails the credit, and third condition has to be satisfied by the other person. What is that condition? The other party has to pay the applicable GST on that particular invoice by way of cash or by way of a ITC. So they have to discharge the liability on that particular invoice. This particular point is very challenging for all of us. How do I know that whether he has discharged the liability? Two ways you can do it. One, you can GSTN portal, you can take the GST number, check whether he has filed GSTR 1 and GSTR 3B. And if the credit has come to you, then you can assume that they have paid the taxes on that particular invoices. Why it has to be done? Because GSTR 1 can be filed irrespective of the filing of GSTR 3B. So they will file GSTR 1 every month, but 3B will not be filed. So that means they have not paid the tax. GSTR 1 is only a declaratory in nature, but GSTR 3B is the actual form for filing and payment. So that has to be verified. For 2017-18, lot of companies have faced this issue. What we recommended is, do one thing, get a letter from the other party. If it is not reflecting in 2A, get a letter, declaration from the party stating that on so and so invoice we have already paid the tax to the central government, and in case any liability arising in future, we will compensate that. So that indemnity letter has been collected by most of our clients, where tomorrow if there is an issue also department auditor, they will show that letter to the department if it is not reflecting in 2A and 3B is not filed. So it is a precautionary measure in order to protect your client's skin.
Is it possible that no, when the person is giving a letter,
Yeah.
see that if he giving means that you should have filed the return?
No, sometimes what happens is in 2A it is not reflecting, sir. It is because of different reasons. One is if your invoice number, if it is wrongly put, it will not be coming to your credit ledger or 2A. Second is if they are putting wrong GSTN number, it will not come. Now GSTN 1 amendment time is also over. You cannot do amendment now for 17-18. So how do I take the precaution? Now I have to when you do an audit, when you do a reconciliation with the 2A, which is a difficult task, but assuming that you are doing it, and you find some differences when you ask for the company, as an auditor, how do you substantiate that this condition has been satisfied? Very difficult. So companies are collecting, they are giving it. Why the vendors are giving? Mainly because they are withholding the payment. Once you make the payment, it is very difficult to get this declaration. Even we have some of our clients also given this declaration. Now, this goods received is done. These 4 conditions, 16, 2 is done. So these are the 4 conditions I already explained. 16.1 also we dealt with. 2 is also 3. 16.3. 16.3 is a very important section where it says that if you are receiving the goods in lots, first proviso, there are 3 proviso to section 16.3. Section 16.2. This is not section 16.3. We have not gone to 3 itself. 16.2, these are all the 4 conditions, right? After that, there are 3 provisos to this. The first proviso says that if the goods are received in lots, then you are eligible to take the credit only upon receipt of the last lot. Say for example, goods are coming in 5 lots and only single invoice will be there. Then you are eligible to take the credit upon receipt of the last lot, not at the time of receipt of invoice. If you look at the big manufacturing construction machines and all, which would be approximately 80 ton weight, it will not go in one truck, it will go in 4 or 5 trucks. When it goes in 4 or 5 trucks, the last truck which reaches, that would be considered for the purpose of availing the credit. Now I have a couple of issues. Point number 1, you are not receiving the goods. There is a time limit for availing the credit under section 16 subsection 4 of the CGST Act 2017. What it says, you can avail the credit only, the last date for availing credit is the due date for filing return under section 39, that is your 3B return date, for the month of September, that is October 20th, or annual return filing date, whichever is earlier. Annual return, forget about it for 17-18, now still we are filing it. Okay, for at least 17-18, the 3B filing date was 20th October 2018 and that was the last date. But very fortunately they extended the due date to 31st March 2019 by way of a standing order, 2/2018 standing order. They issued it in December and then said that no problem, this is the first year of implementation, we will allow you to take the credit up to March 2019. That is only an exceptional standing order which has come. For 18-19 such standing order is not available. So as on date, the last date for availing credit for 18-19 is 20th of October 2019. So in such scenario, you assume a scenario, the first lot received on March 2019. Okay, the invoice is raised on March 2019. The last lot received in December 2019. Will you be able to take the credit? Because you are receiving the last lot after the due date as prescribed under section 16.4. You will not be able to take the credit. So you have to be very, very careful when you are doing sending the goods in lots, especially in the last month of the financial year. Now second proviso to CGST Act, section 16 subsection 2, second proviso to that section says, if the registered person fails to pay, underline the word fails to pay, the recipient fails to pay to the supplier the consideration. If you fails to pay the consideration within 180 days from the date of invoice, then the person who availed, the registered person who availed the credit has to reverse the credit which he has availed on this particular invoice and pay interest under section 50 subsection 1 of the CGST Act at the rate of 18% per annum. I will repeat once again. If you receive a service or goods invoice, you received it, you fail to pay within 180 days from the date of invoice, then you have to reverse that credit and you have to pay interest along with the reversal for 18% per annum at the rate of 18% per annum from the date of yeah, this date is very, very important. That is what I stopped there deliberately. I will tell you the date. I will give you 5 dates. Date of invoice. Okay, date of invoice is the date of invoice is given in the invoice itself, because date of invoice, the moment you say, you have to read it along with rule 46. There, one of the particulars is date of invoice. So date of invoice, you have a date of invoice, invoice date. Second, you have a date of receipt of invoice in your factory. Third is date of booking into the books of accounts. Fourth is date of availment of credit into your 3B. The last one is date of utilization. You understood all the differences, right? It is a general practical scenario that invoice date and booking date will definitely be different, most of the cases, right? So what happens is, for the purpose of reversal of credit, date of invoice is relevant. Okay, for the purpose of paying interest, date of availment is irrelevant. Date of availment is nothing but availing the credit into your 3B. And utilization is nothing but you are utilizing it for purpose of paying your outward liability. That is irrelevant. So these 2 dates you have to concentrate very, very clearly. And for the purpose of reversal provisions, date of invoice is important, and for the purpose of interest calculation, date of availment of credit is important. Most of the cases, assuming that the company is filing return regularly on 20th of the subsequent month, generally date of availment will be on 20th of subsequent month. I assume that everybody, so it depends upon the date of filing of 3B. Okay, so is that clear? Yeah.
Sir, if consideration not received from the customer, then
Okay.
it is the vice versa case. No, when we are not paying, then we reverse.
Yeah.
But in case we are not able to collect the payment
Yeah.
in the GST from my customer, but there I have to pay GST because that invoice is there.
Yeah.
In that case,
See, her question is very simple. You talked about the recipient who has to reverse the credit, correct? What about the supplier? Actually, she is keeping CF fraternity in mind, we raise an invoice, we get it after 180 days. Okay, our client will reverse it along with interest. What about us? Where is our fees? In such case, there is no relief as far as the supplier is concerned. Supplier has already paid the amount, gone. Once you give it to the government, it is gone. Okay, you complied with your responsibilities. But as far as recipient is concerned, he has not paid the consideration, so he has to reverse it. So to answer to your question very precisely, supplier is not coming to the picture at all. As long as you paid based on the time of supply, that means the due date, whatever the due date which you have to discharge the liability on that particular invoice, once you pay, you are out of the provisions. Now recipient,
We never collected the amount. It turns out to be a bad debt.
yeah,
We never collected the amount.
yeah,
But we have to pay GST, because it is coming in the sales.
correct.
And
Now
such
her-
a case, we are paying from our pocket and not getting the money also.
absolutely. I'll repeat once again her question. She's saying that, okay, forget about 180 days. I have never collected it. It became a bad debt. What will happen to the tax paid? Again, same answer, madam. Once you give it to the government, it's gone. You can get the money only by way of raising a credit note. But you should be eligible to raise a credit note. If there is an excess raising of invoice, say for example, your audit invoice is 1,25,000. Actually, the agreed amount is 1 lakh, but you wrongly raised it as a 1,25,000. Then you can raise a credit note as per section 34 of the CGST Act. You can raise a credit note and then get out of it. You will get the money back. Okay, you have to reverse it. You have to ensure that the other party is also reversing the credit. So the chapter is over. But bad debt is not an eligible way to reverse the credit. This you have to read it along with the section 15 of the CGST Act for the purpose of valuation. Once you raise an invoice, the value is already agreed. Once it becomes bad debt, that cannot be considered as a reduction from value as per section 15 of the CGST Act. Only post supply discount only eligible for the purpose of the reduction. So bad debt, cash discount, these are all the things which are not eligible for the purpose of reduction in value. So input tax credit benefit will not be available on that. In such case, what will happen? They will raise a financial credit note, which will never appear in your 3B returns. Financial credit note is nothing but value will be there, 1 lakh, but tax will not be there. So that is how it has to be done. So bad debt, cash discount, all these things are gone cases. Yes.
Can that not be applied as a refund? Because in cases where the amount is highly material,
Yeah.
can't that be applied as a refund? Like we can specify that
Yeah.
and any other reason, and can we apply that for?
You try,
No, I'm
but
not
no. What I'm saying is you try, but possibility is very less. Why I'm saying is only the scenario where you can get a refund is wrongly paid tax. If you have wrongly paid, you can get the refund as per 54. Okay. So in say for example, the actual tax liability is one company case. What happened is instead of the box where you have to mention the taxable value, this guy put the taxable value into the tax amount. He paid a wrong tax. Now nothing can be done. He paid the tax, 1 0 added to the liability. Now you can apply for a refund if you want. Reason being, it is a mistake apparent and you can also substantiate. But in her case, it is not a mistake, wrongly paid. It is actually correctly paid only. So, but if it is material, it is worth to knock the door of the department. Okay. But legally, it is not possible. In my view, you will not be able to get the credit. Since you said material, just fight it out. Now, so now we discussed about section 16.3, section 16.2, the third proviso. First proviso says that, the second proviso says that fails to pay. Say for example, that fails to pay is very, very important. Assuming that you are agreeing with your customer, saying that I will pay only after 6 months, then the 180 days has to be calculated not from the invoice date. Invoice itself would not have raised because the agreement is very clearly says that the liability to pay raises after 180 days. So invoice also would have raised after 180 days. So fails to pay is very, very important point which you have to consider. Now another example, what happened is one of our clients said initially, we informed, so after the GST introduction, all of us started using this 180 days. Forget about 45 days of Micro Small Medium Enterprises Act, you leave that. But most of the clients we say, sir, 180 days is that you have to reverse it. So what the client will say, sir, what is your invoice bill? 1 lakh. What is the credit? 18,000. Okay, I will do one thing, I will pay 18,000 and then you give, I will be able to take the credit. You understand what I am saying? He said, the client started saying, if I fails to pay the consideration, then only I need to reverse the credit. What I will do is, I will pay you the entire GST amount which you remitted to government. I will avail the credit. No, they are not using the word tax, failure to pay tax. It is actually failure to pay consideration. Consideration includes includes tax component also. So 1 lakh, if that is a consideration plus GST, both should be put together, should be considered. Now assuming that you are receiving only 50,000, that should be considered as a value which is inclusive of GST. Say you will get, say your value, invoice value is 1,18,000, and in the middle of the, after 3 months, they are giving you 50,000 random payment. How do I consider for the reversal purpose? That 50,000 should be considered as inclusive of GST. Apply Rule 35. Rule 35 clearly says that how to take out the tax separately. Very simple calculation, 50,000 into 18 divided by 118. That will be the tax component. And if you remove 50,000 minus the tax component will be the amount received against the consideration. So this is how you have to do it. Now 16, yeah.
In our case also, we are conducting audit during the month of September.
Yeah.
Whereas during the month of March itself, we have to raise one provision entry.
Correct.
For audit fees.
Correct.
What about the GST liability?
Yes, absolutely. Very good point, sir. See, all of us, when we do an audit, for statutory audit or tax audit, or as the case may be as a CAs, generally the provision, as sir rightly mentioned, would be made it in the books of accounts on 31st March of the respective financial year end, right? And they will deduct the TDS also. In such case, first point, let me just take a little more facts into it, sir. First point is, is your client eligible to take the credit of the provision which he has made? First point. Are they eligible? No, they are not at all eligible, because section 16, two conditions are not satisfied at all. No invoice has been raised by CS. We will raise it only after completing the audit. So they will not be able to take the credit. First point. Second point, will the reversal apply? As long as the availment is not happened, there is no concept of reversal also. So reversal will happen from the date of your invoice. Say for example, 30th September you completed the audit and you are raising invoice on 30th September. 180 days calculation will happen from 30th September till 180 days. And if the audit, if your client fails to pay 181st day, your client has to reverse the credit. Okay. Now, third proviso to section 16.2 says that if after reversal happened, then subsequently if your client pays that audit fee entire 1,18,000, then at the time of payment they can re-avail the credit. It's a re-availment. It's a re-availment. It's not an availment. It is a re-availment. So re-availment, there is no time limit. Even if your client pays after 10 years, they can claim the credit, re-avail the credit. Only availment there is a time limit, but for re-availment there is no time limit. Let's make it very clear. And now section 16.2 all we have discussed. Now let's go to section 16.3 of the CGST Act. Now section 3 of the CGST Act says that if you are buying a capital goods and you are capitalizing the CGST component and claiming depreciation under Income Tax Act 1961 on the capitalized GST component, then you will not be able to take the credit of the same CGST, SGST or IGST as the case may be. Very simple, my machinery value is 3 crore. If I am capitalizing that 54 lakh GST, then and I am claiming depreciation as per Income Tax Act 1961 on that 54 lakhs, then you will not be able to take the credit of that 54 lakhs. Clear? Now, there are little more complications to it, assuming that availing and then reversing at later point of time. So there was a Gujarat High Court judgment under the old Central Excise Law, subject to 16.4 of the CGST Act time limit. But anyway, I have given it in my PPT and you can go through it. Now, because those are all very advanced scenarios which you will come across. Now section 16.4 we have already discussed time limit for availing the input tax credit. Okay, that is also done. Now let's go to 17.1 of the CGST Act. Next is 17.1. Don't worry, 17, 18 we have already discussed. Now already we have discussed 18.1 A, subclause A, B, C, D, compulsory registration, voluntary registration, all those things we discussed. 18.2 also we discussed the time limit for this particular input tax credit availment. 18.3 we discussed, that is merger, acquisition and all. 18.4 also we discussed ITC 03 cases. So 18 is done, 16 is done. Now let's come to 17 of the CGST Act. Don't worry, 19, 20, 21, that's all. We have only 3 more sections. Okay, 19 is on job work, 20, 21 on input service distributor, read with the corresponding rules. Job work means it's actually 45th rule, I mean rule 45, and like that, that's all. And financial institution banking and all comes under 17.4 only, read with the corresponding rules. So most of the cases will fall into whatever we discussed so far, unless otherwise you are dealing with job work. Job work also very simple, bank also very simple, and the last one ISD is also very simple. Everything is simple only, so don't worry about it. Now now next move on to section 17.1 of the CGST Act. 17.1 of the CGST Act says, if you are providing supplies which are used for business and used for non-business purpose, please be careful, they are not using the word personal use, they are using the word other than business. Anything not for business will fall into other than business. That is a wider definition as far as other than business is concerned. Personal consumption has a limited scope, but other than business has a wider scope. So be careful with this. Now, I will give you, so in such case what happens? The section 17.1 says that, no, if you are using it for personal purpose, whatever the input tax credit exclusively used for the purpose of the personal consumption, please reverse it. So now section 17 is talking about reversal and blocked credits. 17.1 says that you are using it for personal purpose, reverse it. I will give you an example. One company which is a manufacturing company, manufacturing of fans, ceiling fans. So we have been appointed as the advisors. So we said we wanted to visit your factory, understand the process, explain bill of quantity, how does it, the manufacturing process happens, what are all the inputs which you are using, is the bill of quantity correct, do you have a job worker. So we had a detailed discussion. We said we wanted to visit your factory to understand the business better. Okay, so director said that okay, let's go and then visit the factory. We visited the factory. So they have a manufacturing unit, and parallelly there is a R&D unit also, there is an administrative office also. So they are manufacturing the goods, they will put it into R&D, they will test it. What is the testing? Whether it is rotating properly, whether that whatever the technical aspects of it, whether it is correct, whether it is heating is correct, everything they are testing it. Fine, well and good. Now there is an administrative office where the same kind of fan is running in the administrative office also. So out of curiosity we asked, sir, from where did you get this fan? He said, we got our own, why should we buy fans? It is already available in our manufacturing unit, we are putting it from there. So I said, sir, this is for other than business. You are using it for your captive consumption, your own personal consumption, not for your business. So two arguments can come. One is, director said, no, you saw R&D there? Yes, that is a small unit. We cannot actually check the speed of the fan there, so we are using these fans in the administrative office in order to test it. All this explanation can come. I said, I can accept it, no problem, but department will not accept it. Okay, whatever the explanation you are giving. Second argument which he put it across is, this is also my business. This is also my business. How can you say that this is not my business? So there are two things will be there. Business in the definition which is used for the business is very important. So you have to be very, very careful in that particular scenario. This is little factually, little litigative in nature. If you are saying that it is for the business, the department will say that no, it is for your captive consumption. So otherwise people will also say, there was a, I heard that, there was one judgment in the Kerala High Court where the doctor has claimed expenditure of his heart operation, saying that that is for my profession. If I don't have a heart, I cannot work. So he claimed that expenditure of heart operation also. I'm not good in that, income tax to that extent, but I heard this story. So he said, this is for my business. Obviously, High Court also said, no, that is not for your business. And even that being the case, the director who buys some chocolates or ice cream for his wife, in order to ensure that there is a peaceful life for him to increase the business, he will claim it as an expenditure. No, not possible. All these kind of extrapolated, even if it is a genuine reason, no. Even if it is a genuine business expenditure, no. If it will be considered as there should be a line which we have to draw. So this is another aspect. So in such cases, we have to go to Rule 42 and Rule 43 for the reversal. Now let's come to 17.2 of the CGST Act. It says if you are supplying both taxable supplies and exempted supplies. What is taxable supplies? Where you are paying taxes. What is exempted supplies? Exempted supplies have been defined under section 2 subsection 47 of the CGST Act, where it says that taxable exempted supply means the supplies which are wholly exempted under section 11 of the CGST Act or 6 of the IGST Act, as the case may be. Coming down, it again states that the it says that it includes nil rated supplies. So when the notification comes, if it is a nil rated, that is also exempted supply. And the last limb is very, very dangerous. It says that it includes non-taxable supplies. When you go to non-taxable supplies, to understand what is non-taxable supplies, 2 subsection 78 of the CGST Act defines what is non-taxable supplies. Non-taxable supplies means supplies which are not leviable to GST. What are all the supplies which are not leviable to GST? Point number 1. Alcoholic liquor for human consumption, Constitution excluded, and even in section 9 subsection 1 of the CGST Act also you can see that alcoholic liquor for human consumption, not for medical purpose, for human consumption. That word is important. And second point is 9.2 supplies. What are all the 9.2 supplies? It's 9 is only for levies, but let me talk the 5 points which are prescribed under 9.2. Petrol, petroleum product, high speed diesel, motor spirit, aviation turbine fuel, natural gas. These 5 products are outside GST right now. So this is also a non-leviable supplies. And third is, you can also see the Schedule 3 transactions. Schedule 3 transactions are not leviable to GST. So these are all the 3 transactions which you can consider as non-taxable. So Schedule 3, 9.2, then alcoholic liquor, that is coming in 9.1, and over and above all section 11 exemptions or 6 exemptions of IGST, as the case may be, then nil rated, all put together considered as an exempted supplies. So if it is an exempted supply and you are providing both the taxable and exempted supply, you have to reverse the credit which you have availed based on Rule 42 and 43 of the CGST Rule 2017. What is Rule 42 and 43? We have been talking about 42 43 for a long time. Let's talk about 42 and 43. 42 and 43. 42, let me repeat, it is for input and input services. 43 is for capital goods. Now, what is this 42 43? Nothing but it is a simple arithmetic which is given in the rules. Don't complicate it. If you go to the rules, you can see a lot of things, minus that, minus this, minus that, minus this. By the time you understand the formula, you will think that okay, no need to reverse at all. Let's leave it. Because that is a kind of complication which is there. It's very simple, very, very simple. First you take your total credit. Total credit, whatever total credit you are having, you reduce input tax credit exclusively used for the purpose of personal consumption. Personal or other than business consumption. I will put it that same way. other than business consumption. So you got, say for example, 100 exclusively used for the purpose of personal consumption or other than business consumption. You reduce it, you will get a number, right? Then you identify the blocked credit. You reduce blocked credit also, 17.5 credits. You reduce it, so you will get a number, right? After that, you identify the input tax credit used exclusively for the purpose of exempted supplies. That anyway you have to reverse it. The reverse, the minus which you have to do, the reduction which you have to do from this number is the input tax credit which is used for exclusively for the taxable supplies. So, if the input tax credit is used for the exclusively for the purpose of taxable supplies, you can avail it. If input tax credit which is used exclusively for the purpose of exempted goods, pay the tax, reverse the credit. Now, from 100 you reduced two components. First component is used for other than business and blocked credit. Now what you get is the common credit. Eligible common credit, I will put it that way, eligible common credit, because it is used for everything. That you multiply with the exempted supply value divided by turnover in that particular state. That will be the reversal which is required to happen. I will repeat, it is a very simple formula. I will give an example and so that you will be able to understand. There was a high C sale which has happened in this particular company. High C sale is very simple. This was happened in in the first year of operation of after the introduction of GST, that is in 2017-18. High C sale was considered as an exempted supply. What is high C sale? It has, the goods have departed from the port of the other country, but it is not reached into the Indian port, and by the time it has gone to some other country. The sale happened in the high seas. High seas is nothing but that sea area which is not owned by any country. It's an international territory, international water territory. So if the goods are going, so in my client's case what happens, they imported the goods from Japan. The client's goods should have been reached in Chennai. By the time they sold these goods to Sri Lanka, because Sri Lanka sales also coming under this particular Indian region. Value of the goods was 5 crores. Now, because they got an exempted supply to the tune of 5 crores, out of 5,000 crores, it was very minimal in nature. Very minimal in nature. But still the reversal has to happen. Now, how do you do the computation? It is very simple to identify the supplies input tax credit exclusively applicable for that particular exempted supply, because most of my purchases, sales, everything is happening which I can directly attributable to my taxable supplies. It is only 5 crores I purchased and sold it to Sri Lanka, that's all. Now, I removed all the exclusively used for the purpose of taxable supplies. This is a manufacturing company and then trading company, so they, most of the things are their purchases and sales, so that is directly removed. Then after exclusively used for the purpose of this transportation is some transportation charges, some commission, some small amounts were there that we could identify based on the directly attributable to that exempted supply. Then comes the common credit, my laptop, my rental expenses, because within that premise only I used it for the purpose of both the taxable and exempted supplies. The reversal you won't even look at it. The reversal comes hardly 40,000 or 50,000. They reversed it. So identifying the common credit is the most important aspect in this. Okay. So this exercise has to be done for all the exempted supplies. Now 17.1, 17.2 we have discussed. Okay, reversal happen, how it has to be done and all we have discussed. 17.3 says, 17.3 is very important. This has to be read it along with the 17.2. Okay, 17.2 we said that exempted supplies you have to reverse the credit, but 17.3 says that if the exempted supply is on account of interest, bank interest, then interest is an exempted income. See, for example, I am a company, I am getting some fixed deposit interest, then that interest is an exempted income as far as notification number 12 bar 2017 dated 28 June 2017, interest income is an exempted income. For that, if you go to ZK, two subsections ZK of the definition, you can clearly see that what is this interest is all about. So interest is nothing but it is a interest earned on deposits, the consideration earned on deposits, anything like that. So fixed deposit, I got some interest. This interest is exempted. Reversal is not required. Mainly reason because of 17.3. Now recently there was an amendment in section 17.3 after the first CGST Amendment Act with effect from 1st February 2019. They said even if the items are falling into schedule 3, there are 8 items which are prescribed under schedule 3 after the first CGST Amendment Act. Before CGST Amendment Act only 6 items, now 8 items are there in CGST schedule 3. If the transaction is falling into schedule 3, no need of reversal. No need of reversal. Though we understand that it is exempted supply, no reversal is required. 17.3. Clear? 17.4 says, talking about banking and financial. Let's keep it aside. We will talk about little while later as we discussed in the initial time. 17.5, most important thing, blocked credit. Blocked credit. This is very, very important. All of you should be very, very careful with this particular section. I initially, though it is a joke, I used to say that, if you are working in an finance department, blocked credit, the list should be pinned it on your table. In front of you, that list should be there in order to avail the input tax credit. See, why input tax credit is so important? Why is so important? So much of importance I have given to input tax credit. The moment there is a topic on input tax credit, the kind of attention would be very, very huge. Even if I am attending some, sessions and all, I also look for input tax credit. What is this input tax credit is all about? What are all the new things which I can learn out of the speaker's experiences? See, most of the things, whatever the experience which they are sharing is very, very important. So, the input tax credit, we always keep our eyes and ears open. Why? See, there are 2 areas which are most litigative under the old regime also. So it's not a new thing which I am talking about. It is all settled thing. Under the old regimes, indirect tax regimes, you can see that 70 to 80% of the litigations are only on ITC. 10 to 20% on your manufacturing supply. Under GST we call it as supply. Whether it is a manufacturing, tax has to be paid, whether it is a supply, sale. So this would be the dispute. But look at the contribution of input tax credit. Why so much of importance? Government can make money only by way of saying that I will not allow your credit. This is the only way they can make huge money. Second, they can say that you pay tax at the rate of 5%, but actually this is falling into 28%, or you would have considered it as exempted, but department will consider it as a taxable. So obviously, as far as our revenue side is concerned, we would have already obtained the expert opinion. We would have done a detailed analysis. It would be maybe 25 product, 30 product, or even 50 product. We would have done a detailed analysis. As far as my inward supplies are concerned, management is not even looking into it. Most of the cases, it's actually happening in the finance department, where some person will be booking the expenditure, he will avail the credit. That is the area where most of the input tax credit issues will be happening. So what is this input tax credit? So that is why the input tax credit is so important, and most of the litigations will happen on this, and you need to understand the concept in detail with the comma, full stop, semicolon. That is the level of understanding you should have it in input tax credit. And people think that input tax is so complicated. It is very, very simple as long as you understand the concept very simply. It's very simple. Now, I'm not exaggerating that it is no because I'm coming and speaking it is very simple. It is actually very simple, but the way you have to approach input tax credit is little different than that of the other topics. That is the only thing. So the concept is 17.5. What is 17.5 is all about? It is called blocked credit. So what is blocked credit? I will put it this way. If you are satisfying the conditions, I will ask a question. I think that would be better. Motor vehicle, are you eligible to take credit? Are you eligible to take credit? Sir, I need an answer. Please.
No.
No. Back seat. Are you eligible to take credit? No. Everybody agrees that motor vehicle, we are not eligible to take credit. Correct? Subject to conditions, whatever it may be the condition. But that's not right. If you are looking for a professional answer, I mean, if you put it in a proper way, that is a general understanding that is sufficient for our working knowledge. But actually speaking, there is a difference between eligible credit and blocked credit. Motor vehicle, you are eligible. You are eligible because you are satisfying section 16.1 conditions, 16.2 conditions, all conditions, all rules, everything. It is crediting into your credit ledger, tax has been paid, invoice is in your possession, goods is available with you. You are satisfying. As long as you satisfy all these conditions, you are eligible. But government comes and put a restriction, that is blocking. They are blocking you, saying that no, you are eligible but I will not give you the credit. So there is a difference between, even as a unless otherwise it is a technical session, I also use interchangeably. Why? Because if you are too technical, people won't understand. I am talking about the clients, not about the CS. They will understand. So when we say that, it is eligible, but it is blocking you by way of 17.5. So 17.5 is a very, very important section. The credit which is falling into that is eligible, but blocking by way of a specific section 17.5 of the CGST Act. Now what is the 17.5? First point, motor vehicle. 17.5A, motor vehicle. What is motor vehicle? Motor vehicle, standard thing is a motor vehicle for the purpose of transporting the person. If it is for transporting the person, they are not using passengers. Please be careful. Transporting persons, and which is having this is a recent one. There was an amendment also prior to this, and this is the latest one which I am talking about. Where if the transporting person with the seating, approved seating capacity, very, very important, approved seating capacity of 13, including driver. If the approved seating capacity including driver is less than 13, then credit is not available. If the approved seating capacity is more than 13, then you are eligible for credit. Let's make this sentence very clear. Is that clear? I will give you an example for your better understanding. I cannot find any better example other than this tempo traveler. Tempo traveler, you can see a person's with the driver seating capacity of 13 or 12, and you can see it with the 20 also. Tempo traveler. You have seen tempo traveler, right, on the road. That you can see with the 12 also. You can see it about 12 also. That is only vehicle which is having both seating capacity. So if it is about 12, above 13 including driver, you are eligible. Don't look at any other factors. Bus, eligible. Minivan will be having more than 13 seating capacity, eligible. Don't even look at any other criteria. The moment more than 13 seating capacity, you are eligible. If it is less than 13 seating capacity including driver, just come down. They are giving you, except in case of 3 cases, there are 3 exceptions have been given. One, if you are using that vehicle for transporting the passengers. Say for example, you bought a sedan car. First thing is sedan car is blocked. But there is an exclusion to it. Point number 1, if you are using it for transportation of passengers, you are eligible. You are using it for training purposes. You are using that vehicle for training purposes. What is training? You can see Maruti Training Institute, driving institutes. If they are using it, they are eligible for credit. Third is if you are the dealer of motor vehicles, Kivraj Motors, Vishnu Cars, they are all buying the motor vehicle and selling it. So these 3 people are eligible for motor vehicles credit, irrespective of the fact that the seating capacity is less than 13. See, why I asked you to underline approved seating capacity is very, very important. Unlike in south side, north side you can see the seating capacity above 14, 15 also. I mean how? The normal tempo traveler will have a 12 seating capacity, but what will happen? They will add their own seats into the auto rickshaw or even tempo traveler. You have seen north side auto rickshaw and all, they will have their own seating capacity. Extra stool allam potte, they will tie it and then they will have, that is what it is very clearly said, approved seating capacity. You may have 15 seating capacity, but is it approved by the regional transport office? Then only this will be considered as a approved seating capacity. So very, very important, their government is also very clever, approved seating capacity only, not your seating capacity. Now, so this case 17(5)(a) of the CGST Act says this is the provision. Second, if you are using any vehicles for the purpose of transportation of goods, you are eligible. There is no doubt about it, because lorry or any vehicle for that matter, you are eligible, because that is not even coming for the definition of transportation of persons. So as long as it is not transportation of persons, you are straight away eligible. Why this definition has been amended? Initially there was like some glitches in this drafting, because initially they said the same, almost the same definition, but seating capacity was not there. Like construction industry, you can see a lot of motor vehicles which are neither used for the purpose of transportation of passengers, like JCB. These are all JCBs, or these vehicles are actually considered as a motor vehicle, and they will have a registration number also. As long as it is having a registration number, it is a motor vehicle, because then you have to get it registered under Motor Vehicles Act. So in such cases, these vehicles are neither used for transportation of passengers nor used for transportation of goods. So they were not eligible to take the credit. Most of the construction leasing equipment companies, construction companies and all, were not eligible to take credit because of this restriction. That is what now they said, no, we are restricting, our intention is to restrict only the transportation of passengers. So lorry or anything like all construction equipment materials and all eligible for credit. Now the vessel and aircraft also the same scenario. Vessel and aircraft, they are again further coming down and saying that vessel and aircraft, you are eligible to take credit unless otherwise, no, you are not eligible to take credit unless otherwise you are used for the following purposes. Transportation of passengers, you are using it for training purposes and all. And if you are using it for transportation of goods also, you are eligible. So this is the first criteria. Now, some of the industries have faced some issues. Who are all the industries? One is the insurance industry. All of our vehicles would have been insured with the insurance companies. Now, insurance company, when they settle your claims, the dealer, that means your service dealer, will raise an invoice on insurance company for the service, repairs and maintenance of the particular vehicle. Now, insurance company was not able to take the credit. Now, subsequently in the CGST amendment, first amendment act, they said insurance company can avail the credit of repairs and maintenance for the vehicle which is insured by the insurance company. Okay, we will not be able to take the credit. Now, first question, whenever we talk about vehicle, the first question which will come is, are we eligible to take the credit of insurance, repairs and maintenance on motor vehicles? Very thumb rule. Previously there was litigation, disputes. Now it is very clear. If you are eligible to take the credit of motor vehicle, repairs, maintenance and insurance, general insurance on that particular vehicle is also eligible. If the vehicle is not eligible for the purpose of credit, then insurance, repairs and maintenance are not eligible for the purpose of credit. Now it is very clear. Prior to GST First Amendment Act, what was the scenario? There was a interpretation issues in response to a lot of issues were there. Now the issues are all settled almost. Now, section 17(5)(b). What is section 17(5)(b)? Section 17(5)(b) talks about input tax credit which will be blocked for specified services. What are all the specified services? First, point number 1, food and beverages. Input tax credit on food and beverages is blocked. Point number 2, outdoor catering, input tax credit is blocked. 3, your beauty treatment, blocked. Then plastic surgery, blocked. So your health services, blocked. And coming down, your health insurance and medical insurance are also blocked. And leasing or renting, leasing of motor vehicles and all, blocked. So now this is the scenario. Here also there is a significant amendment which has happened before the first GST Amendment Act. In the first GST Amendment Act, I want you to go through what was the situation prior. Almost same only. Now these services which are blocked, this is the general condition, but if these services are received to provide the similar kind of services, then you are eligible. I will repeat, standard rule is if you are receiving these services, credit will not be available, but in case you are providing the same service, you are in the same line of business, you are eligible. I will give you an example. Beauty treatment, you are not eligible. All of you agree? Say for example, I am a corporate company, I am doing a manufacturing of say fans. I will not be able to take the credit of beauty treatment done by my director. But Ambika Pillai is a very famous beautician. If she is providing some service to naturals or green trend, some ladies are laughing actually, they are aware of it. For the benefit of gents, let me tell you, naturals and green trends are the beauty treatment places. Now gents are all more aware of this green trend and naturals, right? So probably I need not educate gents also. So but if the service is provided to the naturals or green trend by Ambika Pillai, which is both of them are in the similar line of business, they can take the credit. But beauty treatment invoice is raised by Ambika Pillai on a corporate company which is not into the similar line of business, they will not be able to take the credit. Food and beverages, you will not be able to take the credit. All your hotel bills, restaurant bills and all, you will not be able to take. The hotel, I mean the food bills, you will not be able to take the credit. Plastic surgery, you will not be able to take the credit unless otherwise that plastic surgery is, say for example, plastic surgery would be done in a hospital. If it is for the purpose of cosmetic, for increasing your beauty, not eligible. But assuming that it is done by a hospital where they acquire some doctor and the surgery is being done and it is a part of treatment. See, this is for the supply. So input tax credit is concerned, no problem. But as far as supply is concerned, anyway, that would be handled by another learned speaker. So let's leave the topic here, because I thought I'll just talk about that, but probably he would have already discussed these topics, right? Okay, whatever. Still, I'm leaving this topic. That's something to do with supply. So if the beauty treatment, all these things are blocked. Now my first point is, I talked about insurance, health insurance and medical insurance. All insurance are blocked. I'll give you multiple examples. Group accident insurance, professional insurance, indemnity, professional. All of us will be taking, or most of the directors will be taking professional indemnity insurance, and the factory insurance, or any other insurance for that matter. Insurance, only health insurance and life insurance is blocked. All other insurance credit you can very well avail it, no problem. Okay, so that is also done. Now let's move on to 17(5)(c) of the CGST Act. C and D, I will combine it together. C talks about works contract service. See, if I receive a works contract bill for whatever it may be the purpose, if it is used in my business, I will not be able to take the credit of that works contract invoice which I have received. Okay, I will come to that once again, because I have to go one by one to make it very clear. If I receive a works contract bill comes under SAC code 9954, serial number 3 of notification number 11/2017, dated Central Tax Rate Notification, dated 28 June 2017. Item number 3, works contract service, SAC code is 9954. The moment 9954 comes, you be very, very careful. Even for construction also, most of the companies, most of the cases, the bill will come in the form of works contract bill only. Because construction of immovable property, it comes under 9954 works contract thing. Because works contract has been defined under 2 subsection 119 of the CGST Act, where it says that any construction, erection, everything, all this, there are 14 words which they have used. on immovable property, then it will be considered as a works contract service. So any works contract invoice which you are receiving, it is blocked. Second point, let me just combine this because there is a twist in this. Section 17(5)(d) of the CGST Act says that if you are getting any invoices where input tax credit has been received for the purpose of construction of an immovable property for on use, then you are not eligible for credit. Let me just explain the explanation to these two sections, subsections. Why I am talking about this, these two clauses are very, very important, because there is an explanation given on the bottom. They say if the works contract invoice or construction of immovable property, these two, if it is not capitalized, then you can very well avail the credit. If it is not capitalized, you can very well avail the credit. If it is capitalized in the books of accounts, then only you will not be eligible to take the credit. I will give you an example. 9954 is the works contract SAC number. When you do your audit, you can do a sorting. I mean, VLOOKUP, once you do it, you will understand what are the 9954. When we did 9954 VLOOKUP, we found two cases. One, company is located in a building premise which is owned by another third party. The building maintenance service will be done by a vendor, correct? It will not be done by the company. Company will be owning only premise one floor, say for example 7th floor. But the building maintenance will be done by a third party. That third party will raise an invoice on you for the maintenance of the building which is on immovable property under 9954 works contract. That works contract invoice for maintenance of that building, you are eligible to take the credit. Reason being, you are not capitalizing that repairs and maintenance, correct? You are not capitalizing, you are not eligible to capitalize that repairs and. So as long as you are not capitalizing that 9954 works contract bill, you are eligible to take the credit. Now, construction for own use. Construction for own use is very, very important. Construction of own use is, say for example, the same company constructed a factory building in Sriperumbudur. Actually, they had a factory, it was actually a warehouse. For the benefit of storing the goods, they constructed a warehouse next to their manufacturing unit. So they got a lot of input tax credit to the tune of almost 1 crore. So they said they wanted to take the credit. So we said no, 17(5) subclause D will come and hit you, you are not eligible to take the credit. So construction of a factory building, construction of a warehouse for own use, you are not eligible. My question is not this. I have another point to be asked. Assuming that I am a real estate company, I wanted to construct some building, malls, say for example Express Avenue malls I wanted to construct, kind of similar kind of Express Avenue malls. I am constructing in Nungambakkam and I am letting it out to third party. Say for example, all of us are sitting here, all of us are taking one floors of this particular building. Can the real estate company avail the input tax credit of this particular building construction? This was a disputable one. This is there is a company called Retreat. It was a High Court judgment. What happened is the company constructed a shopping mall and availed the credit to the tune of 25 crores. So obviously department said that you are not eligible at all because it is for own use. So this went up to the High Court and High Court said no, this is not for own use, this is for the purpose of letting out, hence they are eligible to take credit. So you understand what I am saying. If it is on use, it is not eligible. Till such High Court judgment comes, we were also taking a stand that for even these kind of malls also you are not eligible. Based on this High Court judgment, we are going with a stand that okay, you are eligible right now, because this is the latest update as far as this particular case is concerned.
So,
Yeah.
does that party has to be regular course of business in construction? or simply constructing one building
Yeah.
and renting it out to the
Now, even if it is a single one, doesn't matter. For that purpose, you have to look at the definition of business. Business definition, section 2, subsection 17 of the CGST Act, where it clearly says that volume, frequency, regularity are irrelevant. So, even if you do one single transaction, still it will be considered as a business. So you need not be in the regular you need not do 2-3 construction to avail that.
So if director is buying a land in his personal capacity,
Yeah.
constructing the building, then renting it out to his own factory, to his own private limited,
Yeah.
somewhat like that. So will it, so that person can take a GST number and avail the input,
Credit.
and on the output side he'll be taking the rent
Yeah.
from
Understood,
the,
yeah.
from the factory, which is a separate legal
Correct.
entity.
Correct.
But
No.
he's a related party in both the cases. He's the owner
correct.
of the land,
Yeah.
and he is also the shareholder in the
Yeah.
factory in
Yeah.
that case.
See, I'll repeat the question for the benefit of others. What she's asking is a director who construct a commercial building or whatever factory or whatever it may be, and he is letting it out. It is in his individual name. He is letting it out to his own company, where he is a shareholder. Now, can the construction input tax which is received for the purpose of this construction, can it be availed? This is a question. You understood what I am saying? See, to answer to that question, madam, if the intention is only for letting out, not for own use, you can avail it based on this High Court judgment. But it is not litigation free. It is not litigation free. Department is not going to give you any relief based on this High Court judgment. And this High Court judgment is also not the finality. I am talking about as on date position. Tomorrow there would be a clarification or there would be a notification which would be coming. But as on date, to answer your question, yes, if your intention is not for own use, you are eligible to take the credit based on this High Court judgment which is prevailing as on date.
Or it is better to take the construction in the company's name.
But still you are not eligible.
Then depreciation can be claimed and tax.
Yeah, at least, yeah.
30%
Correct. Yeah, that is a...
So it is litigation free. No, if
That is
the
litigation
goes
free.
to the company,
Yeah,
and depreciation is claimed.
correct.
Taxes say to like 30%.
Yeah, absolutely. If you are capitalizing, if the company is doing the construction, they can avail they can capitalize, they can claim depreciation.
Company can do the construction leasehold land, no?
Yeah, definitely they can do it. They can do it. But the only point is most of the premises like in Sriperambuttur and all, they will not allow you to construct an individual name. The plot will be allocated to the companies. In most of the industrial spaces, they will not give it to the individuals. I'm talking about the specified areas, but otherwise if you have a own place, yes, you can do it. So this is the 17.5 C and D we discussed. Now let's move on to E. E is nothing but tax paid under composition levy, section 10 cases. Yes, sir.
Regarding the construction of factory building,
Yeah.
what we mean by only the outer walls, or I am having a plant and machinery.
Yeah.
For installation purpose, I have to made some civil work and all.
Yeah.
All those are covered under this.
Sir, as long as it is part of immovable property, then you are not eligible. I'll explain to you with a little more facts. First question is it only with respect to the building or I will be constructing wall? I'll add little more facts to it, sir. So for example, when I'm constructing a building, factory building, I will have electrical fittings, I will have, the bathroom fittings, I will have lot of other fittings which are movable, which are not part of this construction. See, that depends upon the way you draft your agreement. If the agreement is in such a manner that you give me the complete furnished home or the building to me, then everything falls under 9954. Your credit will be blocked. Alternatively, what you can do is, you can tell that you construct the building, these movable items, little movable items like fittings and other things, you enter into a separate contract. If it is not part of immovable property, you can avail the credit. Now, this was the stand which we have been taking from the beginning. Now, adding fuel to the fire, they themselves issued a circular on this particular issue. On 8th June 2018, They actually kept the vehicle industry in mind. Actually they said, see, composite supply, mixed supply, all of us are very well aware. See, if you are going to a car servicing company, why are you going? You have wanted to get the service being done. What is the rate at which they will charge? 18%. But they would have used some, spare parts, everything. Those will fall into 28%. Now the department has issued a clarification on 8th June 2018 stating that if you are showing these in invoice as a separate line item, it will not be considered as a composite supply. So based on this particular circular, to answer your question, I can say that if you are entering into separate agreement itself, you are much safer as far as this point is concerned. So you ensure that you will get a limited input tax credit on this particular aspect. Now, tax paid under composition levy under section 10 of the CGST Act, you are not eligible to take the credit. So E is done. Now F is nothing but non-resident taxable person. Any tax paid by the any input tax credit for the non-resident taxable person, NRTP, not eligible except in case of tax paid by this non-resident taxable person while bringing his goods into India at the time of import. Say for example, Justin Bieber, a musician who comes to India, when he comes to India, he will bring his own equipments. That means musical instruments. So when he brings, he would have paid IGST at the time of import. And if he is a non-resident taxable person, whatever credit comes in India, he is not able to take the credit. He has to definitely pay the tax based on without availing the input tax credit. But whatever IGST he has paid at the time of import of those machine or those instruments, he will be able to take the credit. Now E is done. F. If the input tax credit will be blocked if it is used for the purpose of personal consumption. Here it is very clear, it is personal consumption, not for other than business. So personal consumption, if you are using it, it is blocked. We all aware of it. If the director is using for his personal consumption, assuming that it is a trading company, there is a fan trading company, the director says that okay, anyway fan is there in my stock, let's take one fan and then fit it at my house. Then that will be blocked credit. Now the second last most important thing is 17(5)(h). This is most important. Goods lost, stolen, destroyed, disposed of by way of gift or free samples are blocked credit. I'll repeat. The goods lost, stolen, destroyed, disposed of by way of gift or by way of samples, blocked credit. So you will not be able to take the credit on the goods lost. I will give you a couple of examples. Say for example, this company's case, the company was sending the goods from Chennai to Delhi to a customer premises. When they were sending the goods were covered under an insurance. So insurance cover has been taken. So the value was 1 crore plus GST of 18%. So the entire insurance cover has been done for the invoice value, not for the 1 lakh. It is inclusive of GST. Goods were moving from Chennai to Delhi. On the way, there was a fire broke out and then the complete goods have been lost. This is a real case. And they lost the complete goods. Now, first point is, as far as input tax credit is concerned, goods lost. I have to reverse the input tax credit, no doubt about it. The same company had a fire broke out in their bonded warehouse in Madhavaram also. Similar things happened. And value of stock was around 2 crores which were maintained in Madhavaram bonded warehouse. So both are similar situations, fire broke out, goods lost. Now reversal of input tax credit has to happen. There is a second limb to it regarding supply, which I am not discussing. Whether the consideration received from insurance company, whether it is a supply, is there any difference between compensation and then consideration? So those things are with respect to supply. And after that, what will happen? There will be scrap sale also. That is also with respect to supply. But let me restrict my discussion to my point, that is nothing but input tax credit, you are not eligible. I will give you a couple of examples. In your books of accounts, you will make a provision for inventory provision, right? Non-movable or non-movable provision, non-movable inventory or obsolete inventory, you will make a provision. provision for inventory, if you are creating in your books of accounts, are you liable to reverse your input tax credit based on, is it a blocked credit? Inventory provisions, provision for non-moving, yes or no? Not required, because you look at the words which are being used, you have to use some interpretational knowledge here. You look at the definition: goods lost, that means gone; stolen, that means gone from business; destroyed, gone from business. So considering that, inventory provision is only created based on an accounting provisions, accounting standard, applicable accounting standard or Companies Act as the case may be, and hence goods are still there in the business. So you need not reverse the credit based on 17(5)(h). Is it clear? Now my point is, by way of giving it as a free sample. What do you mean by giving it as a gift and free sample? What is the difference between? I'll give you a couple of words for you to understand. Free supplies, free samples, gift. What is the difference between these three? Free supplies, free samples, gift. Because you have to understand the difference between these three in order to appreciate what is the relevant provision for these three as far as input tax credit is concerned. See, free supplies, I will take one small example. Medicines. Medicines, if I am a medical, I am a pharmacy, a small pharmacy, assuming that it's a small pharmacy, if they are selling the medicines across the counter at no consideration, this will be considered as a free supplies. And when I am giving this medicine to a doctor with a clear prescription that it is a free sample, because all doctors' samples will be given as free samples, not for sale. This is a free samples. What is gift? Gift is given in a particular occasion without having any consideration, and gift cannot be considered as a right. You cannot say that, you cannot file a complaint or court case for getting a gift. Gift is voluntary in nature. If you look at the definition of gift also, it is voluntary in nature, not defined under GST Act. It is actually defined under the old Gift Act, and to substantiate you have to just travel to the Australian case laws, where in 1968 one Australian case law, it is based on income tax, which is very clearly settled that the fundamental aspects happened to that particular case law was in 1965, and the cases happened in 1968, and where this case is settled in High Court, saying that gift should be voluntary, you have no right to claim as a contractual obligation. Okay, now this case is still valid in Australian cases, courts, even Supreme Court of Australia are still following this case. So considering the precedence of these two, we can say that gift is voluntary in nature. So free supplies, free samples and gift are different. So gift 17(5)(h), free samples 17(5)(h), free supplies not 17(5)(h). No reversal is required. But will that free samples be considered as a supply? You have to travel to section 7 read with the item number 1 of schedule 1, where permanent disposal, transfer of disposal of business asset, this free supplies are business asset stocks, where input tax credit has been availed. If you had availed input tax credit, that will become a supply, but no reversal of input tax credit is required as far as free supplies is concerned. But gift and free samples, reversal is required. Please be careful with these three words, which are a little confusing, but I gave you enough examples to understand and appreciate the concept. And last one is 17(5)(i). This talks about any tax which you are paid under section 74, 129 and 130 of the CGST Act. What is the 74? 74 is nothing but if you are doing any kind of short payment, non-payment or claiming excess refund from the department by way of fraud, willful misstatement and suppression of act, then section 74 will come into the picture. The corresponding section is 73, where you are not, it is not based on a fraud, willful misstatement or misrepresentation, 73 will come. But when you get a show cause notice, you will never get 73 notices, you will get only 74, because government, once they send the notice, they will always presume that there is a fraud. So 74, if you are paying any tax under 74, you are not eligible to take the credit. Now 129 and 130, what is the difference? When you are sending goods, e-way bill is not there. The department can detain the goods under section 129, read with rule 138, they can detain your goods for 14 days. And if you are paying any tax under 129, then you are not eligible to take the credit. What is 130? After 14th day, these goods will become confiscated by the department. Then 130 will come into the picture. So what is the difference between confiscation, that is seizure, and then detention? Detention means the ownership is still with you, but seizure means ownership will be transferred to the department. Then department will be the owner of the goods. So there is a difference. So 74, 129, 130 sections, if you are paying any tax, you are not liable, or you are not eligible to take the credit. That will become a blocked credit. Okay. So 17.5 blocked credits we have dealt in detail. I wanted to share a couple of other experiences also, but I think, because of course of time, we will not be able to do. I wanted to add a couple of points which I missed out. I just remember when I discussed about here I have to add one more point. 36 rule, 36 sub rule 3 of the CGST rule 2017 says that if you are paying any tax, by way of fraud, willful misstatement or misrepresentation of facts or suppression of facts, then credit will not be eligible. So 17.5 I also there, rule 36.3 is also there in the same line. When I discussed about the 180 days provision, two scenarios where you need not pay tax, you need not pay the consideration. If the transaction is falling into schedule 1, where, say for example, branch transfer, I am sending from here Chennai to my branch in Bangalore. So there is no concept of payment, this is only deemed supply. So in such cases, the government said that no need to pay consideration. In such case, I will consider it as a deemed paid. Second scenario, which is given under valuation. So what happens is in the construction industries and all, this is one very important case which I have appeared in Visakhapatnam intelligence office, where the case was with respect to a construction company. This construction company was doing some projects for the Polavaram project, which was around 20,000 crores project, so which is a big one in Andhra Pradesh. So they wanted to understand whether the credit have been availed properly. So there a lot of investigation was going on. My client also got into this, but my client has kept everything perfect, but still we had to appear and explain. So when you appear, they have a list of questionnaires which they will be asking you. So you should be very, very smart enough to explain or understand from where they are coming from. Their questions from where they are coming from. So all of us will be able to appreciate. That is why for the income tax cases or all the cases, the department officials say that CA, if you are a CA, please sit outside. Because they know that if CA is there, he will understand why he is asking that question. So this guy, but fortunate enough that they allowed me inside, and then he was asking me one thing. Was there what was the value of contract? I explained that this is so and so amount. Did you get any free supplies from this main contractor in order to execute your contract? Say for example, I entered into a contract for 100 crores, and did you raise invoice for 100 crores? I said no, we raised only for 80 crores. Then he asked why you raised 80 crores. I said scope has been reduced. These are all the reasons. There the soil was not fit. So for this particular soil testing, IIT has given this report. Based on that, we gave an estimate. But when we did the digging, piling and all, we understood that that method will not be working properly. And we changed the method. So because of that, the cost has come down. So we explained to him. But he was asking very cleverly, did you get any free supplies? So we said no. what happens is, in such cases, company main contractor will say, when I was doing construction, there are some steel available in the site, you take that steel also and reduce the value of contract. In such cases, there is a supply happening. So say for example, in this case 100 crores is my value of project. Assuming that I got a free supplies to the tune of 20 crores, this section says that you need not actually pay that 20 crores. It will be considered as a deemed paid. Now you will be raising invoice only to the tune of 80, correct? But actually there is a supply concept also, so you have to be very careful. Assuming that you are aware of the provision, you are raising 100 crores invoice and you will be paid only to the tune of 8 crores, because 80 crores, 20 crores worth of goods have been given. In such cases, government said that no need to pay that. It's a book set off. Basically, it's a book entry setting off. So this case, no need to pay the consideration. So these are all the things with respect to input tax credit. Any doubts? Now I am going to job work, banking financial institution, and the last one is input service distributor. Any doubts? Which we will be finishing it within 10 minutes.
Principal, sometimes he supplies some materials due to value or some availability of material.
Yeah.
You said reduction will be there in the
Yeah, correct.
contract value. So we can raise bill only for the reduced value, not on the whole.
No. Actually, supply, if you look at the valuation section 15, it clearly says that value includes whatever the value which you are liable to pay. Say for example, now your contract is for 100, correct? Now actually you are liable to pay that amount 100 crores. You are liable to raise invoice for 100 crores. Now what happens? Now you are subsequently, after the agreement has been entered, all commitments have been done, now the other party is giving you free supplies. That supply actually from his point of view is actually a supply with the GST. It should have been with the GST. And when I raise 200 crores with the GST only. So that netting off you can do it based on this for the purpose of 180. But that supplies both are different supplies. There are two supplies involved in it. So actually speaking, you should not have raised for 80 crores. You should have raised for 100 crores. But consideration will receive only to the tune of 8 crores, because 20 crores worth of material, steel, you have already received. Okay.
So
Now,
I have to receive one bill from the principal for the
definitely. Otherwise, the principal is also in trouble. You are also in trouble. Both of you will be in trouble. So definitely, that netting off should never ever do. That is what, when I appeared in the intelligence officer, he asked this question. They are very sharp enough to catch out of this. The moment you say yes, this cannot be found out immediately. See, when I explain, my contract is also only 80 crores. But why? Because of reduction in scope. But had that been for other value which I have received, material which I have received, then gone case. I am liable to pay GST on 20 crores. He will also be liable to pay GST on 20 crores. So both of us will be in trouble. So now let's move on to any other doubts. Any other doubts? Now, the moment I say doubts, I'm afraid nowadays. Reason being, not among our fraternity, because there I can learn a lot basically, but when I went to a departmental training, it's a small incident where I was handling a departmental training. Obviously the commissioners, all the assistant commissioner, everybody was sitting, and then hall was full. So I was handling the session, and then it was 2 to 5, and after 4:45 I stopped, and then I asked whether you have any doubts. The same scenario where I was in at that time. So I asked whether do you have any doubt. So obviously everybody asked, commissioner or assistant commissioner, they all were asking one doubt or two doubts maximum. Not too much, obviously. But suddenly after a few minutes later, one guy stood up from the back. He stood up, can I ask some questions? I said, yeah, why not? Please go ahead. Then he asked the first question. I was able to answer. Second question, third question, fourth question. He was keep on asking the questions. So I looked at commissioner. I felt something wrong here. I asked commissioner, sir, can I entertain? He said, no problem, you entertain, no problem. Anyway, we have 5 more minutes. So I was keep on explaining. One point of time I lost the thing because he was asking around 9-10 questions. Then I asked, sir, are you actually from the department? He said, I am from help desk. So basically whatever you are asking to the help desk, ultimately it is coming back to you in an indirect manner when you go for a training. So most of the cases we only answer to, we try in portal and we find the solution. When we ask, they will say that you try that and that will not work. Then we call them and say, sir, this is the answer to this. If somebody asks, please give this answer. So actually that is the level at which it has come. Now, any other doubts? Now shall we move on to job work and financial institution? Very simple. Job work is given under section 19 of the CGST Act 2017. Very simple. Job work, they said, one aspect is with respect to input tax credit. I already explained. The moment job worker receives, it will be deemed to be considered as a goods received. Now, as far as the job worker is concerned, as far as the party is concerned, when you are sending for job work, the goods, once they receive it in job worker premises, within 1 year, that goods should have been returned to the principal's premises. Otherwise, the principal has to pay GST from the date of sending the goods, the date of receipt of goods in job worker premises. No, from that date onwards, from that date, that GST is liable to pay along with interest. So obviously after 1 year only you will come to know that there is a GST reversal happening. So you have to pay interest also. They use the word applicable interest. What do you mean by this applicable interest? I don't understand. That has not been clarified. Applicable interest, are they referring to section 50 subsection 1 now? Or subsection 2 a? So now we presume that it is subsection 1, but that is also, there is no underlying thing. So they use the word applicable interest, which I highlighted in my presentation also. We'll see what it is. Now, 17. Now, if the inputs are being sent, then you have time up to 1 year. So here, as I said few minutes back, inputs, capital goods are very, very important. If you are sending capital goods, you have 3 years time. But in case of dies, jigs, tools, fixtures and all, you don't have a time limit. You can get the dice, jigs and all whenever you want it, but still you can avail the credit. That is not blocked. It is still, you can avail it, you are eligible to take the credit. Now, as far as the job worker is concerned, he has to file a form called ITC 04. This is in red with the 19 rule 45. Now you have to travel to 45 to understand what is the provisions with respect to job worker. 45 is saying that you have to file a form called ITC 04, which was very, very difficult. See, I will give you a simple example where we found the issues. Subsequently they cancelled for 17-18 and 18-19. They said ITC 04 need not be filed. It was a quarterly form. If you are sending job work to the party, then you have to, as a principal, you have to file ITC 04. It was a very difficult form. Then for 17-18, 18-19, recently they cancelled the form saying that no, we are waiving that thing. You need not file ITC 04 for 17-18 and 18-19. But what this form is all about? The form is asking a lot of information. So once you send for a job worker premises, say for example, I am sending steel to the tune of 110 steel I am sending to a job worker premises. In case of a fan manufacturing and all, once you receive it back, you will get only 500 kg worth of material. 50% is the wastage of material in that particular industry. So what will happen to that? So when I am sending 110, otherwise 100,000 kg, but when I am receiving it back in the form of a finished goods, I am receiving only 500 kg. This is the data which they are tracking it in ITC 04, which was very difficult. I explained it very simply, but this we understood after having a long deliberation with the directors to understand how the industry works. So ITC 04 is one of the toughest forms which they scrapped it. So I don't say scrapping, they gave a waiver for 17-18 and 18-19. So this is the job worker provisions. This is major job worker thing. Now there is an amendment to GST rate as far as job worker is concerned. Please be aware of it. They said job worker is liable to charge only 12%. Okay, you can go through the rate notification later. Just for your understanding, I wanted to deal with the technical aspect of it. Job worker is defined under 2 subsection 68 of the CGST Act, where it says that job worker means who does treatment or process on the registered person's goods. Okay, so treatment or process on registered person's goods. So assuming that you are doing a treatment or processing of job work for an unregistered person, you are not considered as a job worker. So rate will continue to be 18%. Just to keep it in mind for your knowledge purpose, I am just explaining. The other faculties, respective faculty will come and explain you what is the nitty-gritties of it. Now, job worker is done. Now we are going to deal with the banking and financial institutions. Banking and financial institution, very simple, 17(4) of the CGST Act deals with banking and financial institution. Banking and financial institution, as I explained few minutes back, interest is always exempted, correct? Interest is always exempted. I already explained you 12/2017 notification, central tax rate notification, interest is an exempted one, considering the definition given in the same notification, 2 subsection ZK of that particular notification, it clearly says that interest is exempted. Now banking industry is mainly income is interest only. So they gave you 2 options. One is to the banks, one, you reverse the credit based on 17(2), normal provision which is applicable to everyone. You reverse the credit based on 17(2). Alternatively, I will give you another option. You take 50% of the eligible credit. After removing blocked credit and all, you take 50% of the eligible credit. Plus, I will allow you to take full credit if you are receiving an invoice from the same PAN number registered person. That means from another branch, if I am receiving an invoice, you take the full credit. So this is the 2 alternative given to the banks. It is up to the bank to decide which one they wanted to apply. Now the second one is an alternative one, new scheme or special scheme given to banks. 17(2) is a general one which is applicable across the industries. Now they have given one more option to the bank. Now it is up to the bank to decide which one they wanted to follow. This is the only complication, only point which they have dealt in banking industry. Now the last one is input service distributor. What is input service distributor? Input service distributor has been defined under 2 subsection 61 of the CGST Act, which says that it is an office of the supplier. It is an office of the registered supplier who receives the invoice under section 31 of the CGST Act and who distributes the credit to the person having the same PAN number for the input service received, not on goods, not on inputs. It's only on input service received. So basically he is an input service distributor who distributes the credit to all the parties. So you asked in the morning, right? So if the audit bill, how do I do it? So basically you have to get a ISD registration and you have to distribute the credit. I will give you another example which has come up with the Delhi High Court. What happened is this company is a tour operator basically, like Make My Trip or any company for that matter. They are registered in Delhi. Company name is Deepal Tours and Travels. What their problem is, when they are receiving the online booking based on place of supply provision, they are charging IGST. Because assuming that I am booking from Chennai, I will be charging they will be charging me IGST. But when they are going to procure some accommodation services in Rajasthan, for me to stay in Rajasthan, they will raise them CGST, SGST of Rajasthan. So they were not able to take the credit. You understood what I am saying? The problem is, when they are in Delhi, when they are booking hotels to me, which is located in Rajasthan, Rajasthan hotel, which will charge CGST, SGST of that particular state, which these people were not able to take the credit, and when they are raising, they are charging me IGST. So it was a huge block. They approached the High Court, Delhi High Court. Delhi High Court said that my hands are tied, you approach this GST Council. Over and above, there are some smart people who have not even approached the High Court. They started availing the credit. I will give you one example. One client who is located in Chennai, they had some branch offices in other states where they had a registration also. So what they did is they received the CGST, SGST in that particular state. So for example, I am in Chennai, they received CGST, SGST in Delhi. The party located in Chennai started availing the credit of CGST, SGST of that particular state, stating that where is it mentioned that the prohibition is for state-wise CGST or SGST. Point number 2, another client, these two are AR rulings. Another company has done little more at precautionary level. They said SGST we don't take, we'll take CGST because SGST is a state-wise law. CGST is a central law. Now, 2 AR rulings have come. One where they have taken, Tamil Nadu registered person has taken Delhi CGST, SGST. One company who is little more, put a precaution and then availed only CGST. Both the AR rulings are adverse in nature. Always AR ruling is adverse, advance ruling only. But still this is also advance ruling. But they have given a logic which is very, very important. That is how we have to look at it. AR rulings are not relevant, not binding on us, but it is relevant to understand by what way you will be attacked. When you are advising a client, you know that, okay, these are all the views which are possible. Recently one audit was happening in our client's premises. They asked why the department officials came and started the audit of this company and said that, sir, we are also learning GST. We know that you are a good client. I mean, the department came and told them, so we wanted to learn from your books of accounts. They asked all doubts, how ICCL is exempted. So for their understanding, we gave a BASF limited AR ruling. We gave it to them saying that you please go through this. What they understood, BASF AR ruling is from Maharashtra. It is not binding on me. We said, agreed sir, we shared that AR ruling not to consider the AR ruling. You go through the provisions which are laid down in this AR ruling, which is applicable. They asked us, you share some central CGST notification circular. We said, hold on, ICCL is coming under import, which is dealt under section 5 of the IGST Act. There is a customs notification 33. You go through that 33/2017 notification. ICCL is exempted. You go through that. That is given in that AR ruling. So we explained to them, sir, don't consider AR ruling. Look at the provisions in AR ruling. Otherwise, we have to draft and give it. That is another documentation which we have to do. That will be binding on us. Now this we are just sharing the BASF ruling. Now they understood. They are learning. They are also learning. So this is the kind of experience which you will be facing in future. Now jobber we dealt, bank we dealt, ISD, as I said, these kind of issues will be there. Now my first point is, madam, to this point, auditing doesn't matter. Assume a scenario, you are being appointed by the branches separately for GST audit. You would have obviously charged IGST. They are eligible to take credit. Now consolidated, you are billing one GST audit bill for the entire, the entity. Now it will go to ISD credit, they will distribute it. I don't have any problem. You directly, you would have charged IGST. Indirectly, you are charging CGST. Anyway, they are eligible. I'll give you a tricky situation. Assume in a case where you are conducting some business promotion activity in Taj Coromandel. They will give you Tamil Nadu CGST, SGST. Correct? Tamil Nadu state CGST, SGST, because place of supply is located in here. My company is located in, their registered office is located in Kodambakkam. So they will charge, in Chennai only, they will charge CGST, SGST to this party, to ISD. Can the ISD distribute the credit to all the 20 states? See, CGST, SGST, whatever I receive from Tamil Nadu, by way of ISD, I can distribute it as an IGST. Please note that. That is a very, very important point. So in her case also, if the audit bill comes, I can distribute it in the form of IGST to all other states. No problem. There is a calculation also which is applicable. You can go through that. And Rule 39 is there. You can go through that and then no problem with respect to that. But here there is a technical issue. Supreme Court has already told what is directly not possible cannot be done by way of an indirect mechanism. Had Taj Coromandel raised invoice directly on my Delhi office, would they be eligible to take credit? Would they be eligible to take the credit? No. But now what you are doing, you are asking Taj Coromandel to raise an invoice on my ISD. ISD is eligible to transfer the credit. That is only merely mechanism. So because of that, the credit has got distributed. So that is directly not possible. By indirectly, by way of ISD mechanism, you are availing the credit, which would be very, very dangerous. So you have to be very, very careful. But in case of audit, had it been done directly, you would have then charged IGST, they would be eligible to take credit. But in case of Taj Coromandel, they would have still charged the CGST, SGST. So that is the only point which I wanted to make. Any other questions? I am done with my presentation as far as the entire ITC is concerned. There are a lot more to share, but time is up. If you have any queries also, you can reach me. And the other one is I have shared my material. Whatever I missed out would be shared in the material. That's why I insisted this time to mandatorily to share the material before the session, so that at least you can go through that, and whatever I missed, you can catch hold of from that particular material. Any doubts, sir? Open forum for 2 minutes, if you don't mind. Yeah. Any doubts? If you don't have any doubt, 2 things. One is you understood everything, which is not possible because even I didn't understand completely. Second is you understood nothing. Either of this only possible. So always Lakshman will give always a DRS. You have seen DRS in cricket, right? Always Dhoni will give DRS, right? Lakshman will also come and say break. This is the time for break. So any doubts? Any doubts, please? If you have any doubts, it's right time to clarify. If you don't have any doubts, thank you so much for being a patient listening, and then it was a wonderful session. I really enjoyed it. Thank you so much. Have a good day. Thank you.
So thank you so much, sir. It was a wonderful session. We also enjoyed it thoroughly. It was a heavy topic, and you made it look so simple and light. Only after swimming through the provisions in the audit, we'll face the difficulty. At the time, we'll disturb you again. Thank you so much.
Thank you so much.
Thank you, sir.
Thank you, sir.
Thank you so much.
Sir, lunch is ready. We'll break for lunch.
Hello everybody. It's my pleasure to welcome CA Ganesh Prabhu Balakumar to the dais, the speaker of the day. And the topic today will be place of supply and recent changes in GST audit. Sir is a specialist in indirect taxes for more than a decade, heading the GST and indirect taxes compliances, advisory, litigation and vertical practice. He's been a faculty for various forums. Also for ICA, many of our programs, he is one of the speaker on the GST topic. And also, apart from institute, he has been a speaker in the National Academy of Customs, Indirect Taxes and Narcotics, and CGST Department, Regional Training Center, AG Office. He is a resource person in ICT Academy, an initiative of Government of India and other states. So we have a prolific speaker today. I think you will enjoy the session. Thank you very much.
Good afternoon. Good afternoon. Yes, sir. Afternoon. So afternoon sessions are always interesting. And all speakers who have to be trained will be always an afternoon session speaker. Now, any case, coming back here, a nice topic we have in our hand, a topic called as place of supply. And of course, coupled with all those recent changes under GST audit, more specifically we have the recent notification which came out and amended all those provisions, certain difficulties were expressed to the government, and government has identified and said all these tables now becomes optional, which was a mandatory field, and the final version 1.6 tool of GSTR 9C audit tool was also released. Audit filing utility tool was also released. Now coming back here, given this background, a topic like place of supply, why it is important? All of us sitting here are already aware this is a topic where the real importance of it can be appreciated only on a main topic called as nature of supply. Whether a transaction is an intrastate supply or interstate supply, that decision is often led by section 3, section 3, section 4, section 5 of IGST Act. All these three sections comes out and says if the location of supplier and place of supply are going to be in same state, then it would be treated as interstate supply. Location of supplier and place of supply are going to be in different state, then it would be treated as interstate supply. Let me repeat it. Till today, a lot of people still have in their mind it is a decision of inter or inter is based on location of supplier and location of recipient. Very interesting to note, before even getting into some of the nitty-gritties associated with very simple 4 sections that we will be discussing on place of supply, before even getting into that, supplier located in Tamil Nadu, recipient is also located in Tamil Nadu, place of supply is outside the state. Possible? In a transaction, supplier in Tamil Nadu, recipient in Tamil Nadu, place of supply outside the state. Possible, not possible? Yes. So if that be the case, then should I need to charge or I need to use a section called as section 9 of CGST Act, treating it as an intrastate supply, or should I need to use section 5 of IGST Act and treat it as an interstate supply? It's intra or inter. Between these two, I have to land up somewhere. Either it has to be intrastate supply or interstate supply. What it is, when we get into the specific discussion, if location of supplier and place of supply are going to be in different state, then it will be treated as interstate supply. Section 7 of IGST Act would come out and make a discussion very cleverly. Similarly, if location of supplier and place of supply are going to be in the same state, it will be treated as intrastate supply. Section 8 of IGST Act will come out and place discussion. The purpose of discussing place of supply itself, where it can be broadly discussed in 4 sections, section 10, 11, 12, 13. 4 sections. 10 and 11 for goods, 12 and 13 for services. Again, 10 goods domestic transaction, 11 goods international transaction, 12 services domestic transaction, 13 services international transaction. So very categorically placed 4 section. The first more than 90 minutes or so we will discuss on place of supply and then get into updates relating to GST audit or the recent changes relating to GST audit. Coming back here, getting into this discussion more specifically, where the place of supply section purpose or the need is just to determine whether it is intrastate supply or interstate supply. And having said this is going to be an intrastate supply, then how my decision will be made? Decision is made only, the decision making factor here is place of supply, and for goods how it is being determined. Section 10 of IGST Act deals about domestic transaction for goods, where the heading is very carefully worded. This transaction is applicable for other than import of goods, other than export of goods. So let's start there itself. Section 10 makes upfront, it is very clear, place of supply of goods other than export, other than import of goods. So if it is export of goods, import of goods, we have another section called as section 11 that will take care. This section will take care only transaction other than that, very popularly called as domestic transactions, where I remove the goods from Tamil Nadu and the goods reaches another state, Andhra Pradesh, or I remove the goods from Tamil Nadu and the goods reaches same Tamil Nadu, some other location. How I need to determine place of supply for goods? Broadly, section comes up with 5 different possibilities. One, a general situation, or we can call it as where goods involves movement. The second one would be in case of bill to ship to transaction. The third one would be relating to all those transactions where goods does not involve movement. Fourth is in case of installation and assembling happens in a goods. Fifth, in case goods are supplied on an onboard conveyance. To put it in a different way, 5 different possibilities, or I would rather say 5 different place of supply relating to goods are discussed. When goods involves movement, whenever goods involves movement, and the movement, where movement for delivery of goods, when goods involve movement and the movement is for delivery of goods, and that movement is going to be by either a supplier or by a recipient or by any other person, then the destination of the movement would be place of supply. When goods moves from Tamil Nadu to Andhra Pradesh, let's say Tamil Nadu, Chennai to Andhra Pradesh, Vizag, then the destination of the goods, if supplier moves the goods or recipient moves the goods, or it is going to be any other third person who is going to carry the goods, the destination of the goods is going to be place of supply. What is interesting to be noted down here is not this general transaction. In case sometime contracts are signed exceptionally that goods will be delivered ex factory basis. Possible? Where one of the manufacturing company comes out and says, we will make the machine, but we are not involved in transportation of machine. Give us 17,50,000, ex factory price is 17,50,000. No, kindly you deliver the machine to our situation. No, we won't deliver. Our responsibility, our risk stops at our factory gate, ex factory 17.5 lakhs. If a company in Tamil Nadu receives an order from a company in Andhra Pradesh, location of supplier Tamil Nadu, location of recipient Andhra Pradesh, this Tamil Nadu company delivers the goods at factory gate. The responsibility of transportation now is with supplier or recipient? Recipient. And recipient moves the goods from Tamil Nadu to Andhra Pradesh. Question before us is, where is the place of supply? Tamil Nadu, or the goods were destinated Andhra Pradesh? Can we able to appreciate this question? A factory which is located in Coimbatore, which clears the mission, to a company which is situated in Vijayawada, Andhra Pradesh. Question before us is, place of supply is Tamil Nadu or place of supply is Andhra Pradesh? These are the challenging entry on this. Where is it actual delivery of goods or constructive delivery of goods? This country will debate it at least for another 5 years. As of now, by usage of the words either movement by supplier or by recipient or by any other person. I fixed a third person whose responsibility is to bring the goods and deliver it to me at my factory gate. So because of that reason, or as a manufacturer, I engaged a third party, told X factory I will deliver the goods, but responsibility of transportation is this fellow, he'll collect from you money separately. All that story will be done. Then maybe based on the principle of constructive delivery, someone can say, no, place of supply is not Tamil Nadu, place of supply is Andhra Pradesh. But do we have challenges here? Yes, preferably ex-factory sale, a client who sells at destination, delivery of the customer place delivery. I don't think so there is issues in this transaction. To the contrary, whoever give at factory gate, they have a challenge associated with it.
Even the car dealers, no?
Yes, sir.
Suppose from here I am going to take car from furniture dealer.
Hmm.
Dealer will deliver,
You will deliver only at Pondicherry, sir. You will have a address proof at Kerala. You will buy a car from Pondicherry, okay, and the car will be delivered at Pondicherry, and it would be place of supply is Pondicherry. After the car is delivered to you, where you took delivery of the car, roamed in Pondicherry itself, the concerned person roamed in Pondicherry itself some 10, 20, 30, 50 kilometers. After that, he will give back him to for what? Transport it to my place. At that time, we had an interesting question. When the car now is given to the same dealer, you transport it back this car to Kerala. At that time, whether e-way bill need to be generated or not, because it is a car which goods more than 50,000 rupees. Is it a personal asset? The goods that is now transported is a car or a personal asset? Okay, business means then there is, see, business means also you have challenge, very simple. You will not get a IGST bill because delivery is here. These are all the challenges that we see here. Because now somebody will think about it. No, why you are all speaking about actual delivery? Nowhere the intention of the lawmaker is actual delivery. The intention of lawmaker is constructive delivery. This goods is going to go there. Then the location is there. But on a plain reading, it seems that the intention is only actual delivery. But however, that view is getting debated left, right, center. But except where issues of this is not.
What happens with that ex-factory transaction? It's a CGST, SGST.
Now that answer is debatable. That answer is clear debate. We don't have this is what is the right answer.
Let's say it's a CGST, SGST transaction.
Yes.
Then how does the transporter he takes the goods out of the state?
He'll raise an e-way bill and he'll take it. Taking the goods is important or claiming ITC is important now? Do you think taking the goods is important or claiming ITC is important? Huh? Both. To my mind, claiming ITC is more important. I don't bother about movement of goods and all. Movement of goods and all, I can raise a e-way bill as a recipient and close the issue. For me, that is not difficult. For me, what is more difficult is, sitting at Andhra Pradesh, Vijayawada, I want a credit of what? On a 10 lakh rupee material, lakh and 80,000 rupees. I am now not entitled for that because if it is IGST, I am entitled to claim credit here. If it is Tamil Nadu CGST and Tamil Nadu SGST. Okay, CGST which is paid in Tamil Nadu and Tamil Nadu SGST. Where is the question of he is sitting at Andhra Pradesh and claiming credit? So I think the lot more bigger question that need to be answered is ITC than movement of goods. Movement of goods, as a buyer you can always generate a e-way bill. As a supplier you can generate a e-way bill. Similarly as a recipient you can generate a e-way bill. There I don't think so there is an issue. But the larger issue is from place of supply, which will decide the levy section, which will further decide the availment of input tax credit. So in case of ex-factory sales, alone we have this challenge. But for it, there are no other challenges associated with it, which will trigger a question of actual delivery or constructive delivery associated with it. Moving back from here, after the first entry which discussed about in case goods involves movement, getting into the next limb of the transaction where section 10 in its second limb comes out and says that in case of bill to ship to transaction, where the goods are going to be billed to location A, goods are going to be supplied to location B as per the instructions of a person who is located in location A. So when goods goes to one location and bill goes to another location, now my place of supply will be determined based on what? For which we have a very comfortable answer which comes out and says place of supply will be based on location of supplier. Where is the supplier is located? Or I'll rephrase it. Instead of not location of supply, the place of supply will be the place where the goods are going to be billed. That is technically the third person who is going to give the instruction to supply the goods. The location of supplier will be the place where he supplies the goods, whereas the person who is going to instruct the supplier where he is located, and he instruct the supplier to deliver the goods at another location, the place where the third person is located who gives him instruction, or the principal place of business of the third person where he is located, that would become the place of supply. To make all this discussion little more comfortable to us, supplier is located in Tamil Nadu, the person who gives instruction is located in Maharashtra, delivery of goods is going to happen in Karnataka, where the person who sits at Maharashtra instructs the Tamil Nadu supplier saying that rice bill to me but deliver the goods in Bangalore to one of our client. As per the instructions from the third person, the supplier in Tamil Nadu raised bill to the fellow who is located in Maharashtra with an instruction there itself, delivery at this fellow named Karnataka, and the goods were delivered in Karnataka. Place of supply will be the place where the person who gives instruction, or the place where the goods are billed location, which will be Maharashtra. Maharashtra would be the place of supply. Some interesting transactions would have happened here, where supplier is in Tamil Nadu, delivery of goods is also in Tamil Nadu. However, the person who gives instruction, he is located in Maharashtra. Even in that case, place of supply would be Maharashtra, because he is the who gives instruction to supply goods at this location. Here we will not look for destination, because there are two people, the fellow who gives instruction and the fellow to whom goods are going to be delivered. This is a fundamental difference between my earlier transaction and this transaction. In my earlier transaction, the person who gave instruction and the person to whom goods are going to be delivered, both are same. In this transaction, the person who gives me instruction and the person to whom I am going to deliver the goods, both are going to be different. If this be the case, then I will look only for the person to whom who gives me instruction and to whom I am going to bill. That will decide my place of supply. So, in case of all our transactions which are routed through various e-commerce portal, or all those commercial transactions where billing has to happen at one location and delivery has to happen at another location, all this is possible with the help of this specific model of section 10 called as bill to ship to transaction. In case of bill to ship to, place of supply will be the principal place of business of the person who gives instruction. Moving forward from bill to ship to transaction, the third limb of the section comes out and says, if goods does not involve movement. One of the fundamental feature of a goods is it involves movement. But here we have a transaction which says where there is a sale of goods, where there is a supply of goods, but that goods does not involve movement. Is it possible? Yes, sir. I have stored the goods in warehouse. Now I sell the goods, whatever that are stored in the warehouse, completely to another person, and I exit out of that business. These are all transactions that happen once in a while, not a regular transaction, but maybe transactions such as maybe 3 years before, organization would have taken a machine on operating lease and they have been using it for the last 3-4 years, and a day has reached that machine was used for its optimum capacity, and now the lessor decided to give away that machine, gave a lessee an option: if you want, you take this machine, give me that final value 2 lakh rupees. Very interesting to note. Machine is already with the lessor. Yes or no? Lessee is located in another state. Don't bring a same state example. Lessee is located in another state where machine was already given by the lessor and lessee has already been using this machine. Now machine is not going to move at all. If in a situation like this where machine is not going to move at all, maybe we can use this provision. The intention of this specific subsection is wherever goods does not involve movement, however there is a sale happens, however there is a transfer happen, however there is a disposal of that machine happens or disposal of products happen, whatever be it, then the place where the goods are located, that would be place of supply. So if goods are located in a particular location, that becomes the place of supply for those respective goods. Maybe it is a transaction which is of as is where is basis, or it is a transaction where organization, sometimes certain companies would have spent quite a bit on its interior. The successor of that company or somebody who is going to fall back for the same company, he may be procuring with the same infrastructure at a price where that infrastructure does not require any movement. All this can be an exceptional discussion, but for it nothing great is going to be associated in case where goods does not involve movement. Whenever goods does not involve movement, yes, the place where the goods are located, that would be place of supply. Moving forward towards the fourth limb of section 10, which comfortably came out and told, in case of assembly or installation of goods at site. Sometimes companies which take up certain contracts are also responsible for installation of those machinery at the respective buyer's factory or recipient's factory. If that be the case, supplier has to send his technical person, ensure the installation of the machine happens in the another location, then the place where the asset is installed, the place where the machine is assembled would be the place of supply. Here little interesting to note, we are not talking here of erection of a machinery. We are talking of a installation of a machinery. So always that movability should be associated with that machinery. If that machinery becomes little immovable in nature, if the product after installation or after erectioning becomes immovable in nature, then maybe this discussion is not warranted. As long as it has to be goods, then only this discussion is relevant. One of the ingredient of being goods is movable, and here we can take up all those simple examples of mere installation. I would hold myself for assembling also, but okay, after assembling also machine is movable in nature. Now it's a full-fledged structure, it's a clear assembly plant, a cement plant, all these are all immovable in nature. All these are all services, works contract services. The moment something becomes immovable in nature, it takes the characteristics of a works contract services when material is associated with it. We are talking here of a boiler which is sent in 3 segments, assembled at the other end. which can also be dismantled and again sent it back as 3 segments without much difficulties. If that be the case, then yes, the place where it is installed, that would be place of supply, or the place where it is assembled, that would be the place of supply. On to the last limb of section 10, where they simply told, in case goods are loaded on a onboard of a conveyance, be it a train, be it an aircraft, and it is sold on board, the place where the goods are boarded on the conveyance would be place of supply. What is the journey, what is the destination, all that is not relevant. Where the goods are boarded. If the goods are boarded in by a supplier from Coimbatore in Palakkad railway station, then place of supply is Kerala. Supplier might be located in what? Coimbatore. Recipient might be Southern Railway Salem division. We are not here bothered about who is supplier, who is recipient. We are only bothered about where the goods are loaded. The goods were loaded in Palakkad junction, then place of supply becomes Kerala. So in case wherever goods are going to be supplied on an onboard conveyance, then the place where the goods are boarded would be place of supply. This sums up the section 10, a very comfortable entry, nothing great associated with it. 5 simple transaction. In case of movement, the destination of goods. In case of build to ship to, the place where the goods are going to be built. In case goods does not involve movement, then the place where the goods are located. In case installation or assembly of goods, the place where the goods are installed or assembled, on board the conveyance where it is boarded. So this would sum up the place of supply in case of goods transactions, which are all only domestic in nature. None of these goods are going to move out from India. All these are goods, or all these are going to move within India. No, I have in my hand my goods which moves from India to outside India. Then very simple, all that will be discussed in section 11, which will be export of goods or for import of goods purposes. Moving forward from section 10, which dealt in a great way with goods, section 12 deals upon all those services. In fact, government comes out and lists a few services and say, for these services, place of supply will be, we have determined this as place of supply. Except for these services, if somebody is not covered by the specified category of services, then for rest of that all services, you can use a general entry. A general entry will be covered if they are not covered by the specific header. We have about 12 entries which will specifically discuss about that services. For example, transportation of goods, we have an entry. Transportation of passengers, we have a specific entry. Or it could be immovable property based services, we have a specific entry. Like this, when we have a specific entry, if a supplier of a service covered by that entry, we have to determine place of supply only based on that entry. We cannot come to general entry. When general entry will be used? When supplier is not covered by the specific entry. When supplier is not covered by the specific entry, general entry very simply comes out and says, location of recipient is place of supply. Where is your recipient located? That would be my place of supply. Sir, I have a client. Where he is located and all, I don't know. But one good thing, every time he asks me question, I raise invoice, he gives me payment. Then my next question is, you raise invoice, no, you will have address. No, I raise invoice in his name only and mail it. He'll make me fund transfer. Sometime, some exceptional questions will come. Very simple. If recipient address is not available, location of recipient is not available. Very simple. You know your location, where you are located? Yes, I know. Yes. Location of supplier will become place of supply. That is an exceptional case. Let me repeat it. 99% recipient's location will be available or known to the supply. It's a exceptional situation where a recipient location is not known to a supplier. Even in that case, government want to give us stand. In case I am not sure about my recipient's location, very simple. Location of supplier will become place of supply. Having said all this, getting into the specified category of services. When it comes to those specified category of services, these are all just a small list among them. Let me repeat it. I have not ventured into none of those specific heads individually. A small list of services. In fact, I would broadly split these services into two buckets. A place of supply of service, something to do with immovable property. A place of supply of service, something to do with some specified services, something like restaurant, fitness, outdoor catering, all those. Organizing of event, admission to event services. These services are covered separately, including training and performance appraisal services. Another list of services which has all in itself: transportation of goods, transportation of passengers, insurance, banking and financial services, all these services, including on-board conveyance. Now what is that we are going to do? Every service we are going to discuss what is going to be the place of supply. Once this topic is over, we'll take a few questions of little discussion purposes. There, how far we could able to relate all this, yes, that would be the real area. And instead of reading this topic in a little isolated way, when we connect ourselves with the nature of supply, I think the real charm of this topic will gain. To start with, in case of immovable property based services, any services directly connected with immovable property, or any services such as renting of immovable property, giving immovable property on temporary accommodation purposes, or giving a function hall for the purpose of marriage, celebration or any other functions, then the place where the immovable property is located, that would be place of supply. So where is the immovable property located? If the immovable property located, then that location or that state would be the place of supply. A very interesting fact would be, all the way from Karnataka, Bangalore, a person would have travelled for an official purpose to Tamil Nadu. And in Chennai, he would have stayed in a hotel. And very meticulously he will give his what? GST number when the final bill is raised. Now, the hotel in Chennai, for the hotel in Chennai, which accommodates a guest who came all the way from other state, place of supply will be Tamil Nadu, Chennai, Tamil Nadu, or Bangalore, Karnataka, where his corporate office is located. Chennai, Tamil Nadu. Very simple. Will the other party be entitled for ITC? Answer is no. Now, somewhere this is where this law will make its U-turn, where location of supplier is not relevant to me, location of recipient is not relevant to me. Where is your immovable property is located? That would be the place of supply. He is a valuer and a surveyor of all those buildings. He provide a land valuation activity or a valuation activity for a land and building stationed in Chennai for a company who grant loan from Bombay. Maharashtra. This fellow supplies services to a NBFC or a banking company who is located in Maharashtra. Recipient is in Maharashtra, supplier is in Tamil Nadu, activity is land valuation, and he is also a surveyor and land valuation report he is going to give for that land and building. Place of supply will be Tamil Nadu, Maharashtra. Yes. Maharashtra, Tamil Nadu. Maharashtra. Good. Property, land and building located in Tamil Nadu. Is my valuation services, measurements, this, that and all directly connected with the immovable property? Yes or no? Place of supply is Tamil Nadu. He has to raise a CGST, SGST bill. Now, these are all the small challenges associated. Sorry, sir? No, you cannot link to usage.
Hotel alarm number we can link to usage.
Sorry, sir?
Say hotel or alarm or anything.
Hmm.
Usage is we can also link. Whereas here it's only an appraisal.
Okay.
I can give you opinion.
Okay. Now point here is, it starts something. Actually this is a commentary, this is not a real wording. All expert services, including agents, even real estate agents services are covered here. So if I am going to give a structured walkthrough of a building, 3D structured walkthrough of a building, or I am going to give an opinion on that related immovable property, the place where the immovable property is located. I completely agree, the usage of this report has some material aspects outside the state only, no second thought about it. But on a plain reading of this law, it has its own downsides associated with it. One such downside is this: opinion given by an advocate, a specific legal opinion given by an advocate on a property is linked with this property. The place where he cannot even, of course, on the other end, the recipient pay taxes and reverse charge, so they don't much bother about it. Or the banks also say, we are debiting your account to this advocate fee, which is mandatory. It's end of the day, it's going to be the recipient who is liable to pay tax. But the point here is, place of supply decisions are based like this. Coming back here, wherever immovable property is going to be there. For example, a construction company in Tamil Nadu gives an architect designing services to an architect in Tamil Nadu, where the mall is going to come up in Kerala. No doubt, place of supply is Kerala. The place where the immovable property located or intended to be located. My immovable property intended to be located in Kerala, place of supply is Kerala. What has changed? Nothing has changed. The transaction will no more be an intrastate supply, the transaction will be an interstate supply. During GST audit or any other assessment, when we touch transactions like this and revisit the understanding, I think assessees will be threatened by section 77 of CGST Act and SGST Act, which very comfortably comes out and says, instead of intrastate supply, you paid it as interstate supply, or instead of interstate supply, the assessee has paid it as intrastate supply. Assessee shall once again repay the tax without interest. So that's all. So what will happen to the tax that I have wrongly paid? You are entitled for refund. So what is my refund time limit under 54? 2 years. When you have discussed the problem? Exactly after 2 years. Because now only I am doing my GST audit. Now only I ask the fundamental question. And during my GST audit, this issue rises up. Can I now go and make a refund application? Very simply, the officer would say, sorry, refund is time barred. Now for an issue like this, time barring is there? Yes, section 54 is very clear. Now these are all the other downsides. Why this topic becomes a lot more important? Sometimes it is rare that supplier and recipient both are in India. Immovable property is located outside India. Immovable property is outside India, but both supplier and recipient are in India. Then law simply comes out and says the location of the recipient will be place of supply if immovable property is outside India. If a immovable property is outside India, location of recipient would be place of supply. Exceptional transaction, not regularly occurring one. In case of certain specified services, government picks a list of services where they say, in case of restaurant, outdoor catering, or in case of all those services in connection with fitness, beauty treatment, or services relating to health care, more specifically on cosmetic and plastic surgery, the place where the services performed, that would be place of supply. Let me repeat it. The place where the services are performed. All the way from another state, if a fellow comes to a hospital which is located in Greens Road, Chennai, place of supply is Tamil Nadu. Don't say no, that fellow came all the way from Odisha, that fellow came all the way from Hyderabad. No stories. Location of recipient, address of recipient, patient record. The entire services are performed here. Place of supply is here. The food is performed here. I'll rephrase it or put it in another way. Generally, a restaurant will always have a intrastate supply bill. Rarely will have an interstate supply. Because predominantly their services are performed in that restaurant. But for outdoor catering, they have to carry the food to another state. It's exceptional transaction. I'm not saying regularly it will happen. Rarely it will happen. But predominantly it would be the location where the services are performed. So based on these, for these few services alone, the place where it is performed, that would be place of supply. He might be a person who come all the way from another country, but for a morning gymming activity, he gets into that specific hotel's gym and does his or uses the gymnasium services, for which a particular amount is collected. Never the hotel can say, see, I am a supplier in India, that gentleman, passport and all, see, he came from foreign country, export of services, no story. The place where the services are performed would be place of supply. People will come from outside and only use your gym because you are a hotel and you do services over there. Intentions are different, but end of the day, these services, the place where services are performed, that is going to be place of supply. Followed by, in case of training and performance appraisal services, a little weightage is given to a word called as and. Training and performance appraisal. So it is not those regular coaching or training services that happen. Here, sometimes few companies engage HR trainers who has to train people on certain specific modules or certain specific skill set, and the appraisal of that is also done by the same training company. Those training and performance appraisal services, if this supplier of service provides services to a registered recipient, then place of supply will be the location of the recipient. In case this training and performance appraisal service company provides services to an unregistered recipient, then place of supply will be the place where the training and performance appraisals is held. Let me repeat it. Except for next one slide, rest all slide continuously for next 7 numbers will give 2 answers. If my recipient is registered, answer 1. If my recipient is unregistered, answer 2. This answer 1 is a consistent answer. If my recipient is registered, very simple. Location of that address, that GST number, that becomes what? Place of supply. It could be training and performance appraisal. It could be organizing of event. It could be transportation of goods. It could be transportation of passengers, insurance, banking and telecom. All these 7 services will give a standard answer for the registered recipient. Technically in GST, if the recipient is registered, no issue for these 7 services. Very simple. Where you are registered? No, I am registered in Tamil Nadu, Andhra Pradesh, Karnataka. That becomes place of supply. If in case I interact with unregistered recipient, then my answers are different. All 7 places answers are different. So to start with that 2 answers which will begin now on. In case of training and performance appraisal, if I deal with an unregistered recipient, the place where training and performance appraisal is held, that will become place of supply. Similarly, in case of admission to an event, this was the exceptional slide here. Technically speaking, if government would have put this entry 1 number before, it would have been amazing. Why? Because in row continuously 7 subsections will have 2 answers. Starting from the entry number 2 till entry number 5, we will have only 1. But somehow that sequential swap was missing. Now point here is unnecessary. Now we have to swap it. Admission to events. In case of admission to event, the place where the event is held, that would be place of supply. Any event, admission to an event, it could be a sporting event, it could be a charitable event, philanthropic event, New Year Eve, or any concept, whatever be it, the place where the event is held, admission, where a person standing over there collects 1,500 rupees and admit a person. That is what is admission services or admission to an event. If that be the case, the place where the event is held will become place of supply. For the same event, there will be one fellow who will organize everything. The audio, video, followed by the stage management, and then the organization of the crowd, people, everything, security, followed by all those aspects associated for event to be done. For all this, a fellow is responsible, otherwise called as organizer of event. This organizer of event supplies services to a registered person, registered recipient. Then place of supply will be location of recipient. Same organizing of an event. This organizer of an event supplies services to unregistered recipient. Then the place where the event is held, that would become place of supply. So points for our discussion over here is, when a company want to have its product launch in 5 states, they engage a event management company, and that event management company signs and gives saying that yes, in all these 5 southern states you can have your product launch, we will manage everything, hotel, accommodation, this, that, travel, everything will take care, don't be bothered. Pay money alone, yes, that will be paid. Now point here is, for this company there is no issue at all organizing event company. Why? Because the other party is such a big MNC and other party is registered. When other party is registered, for me, where I go and conduct the event becomes irrelevant. recipient is registered recipient, location of registered recipient will become place of supply. Same event organizer this time conducts a wedding event. I am of a view wedding and all is not for business. Okay. So, but point here is, because they hail from a particular state, in that state 3 events has to happen as per their custom. Because they predominantly live in another state, in that state 2 events has to happen. So all 5 event management is given to this event organizer, who is going to handle everything. This event organizer also handled everything. If that be the case, whatever money he received has to be strategically splitted based on the time spent, money spent, cost, all this. For the first 3 event happen in state 1, place of supply is state 1. For the next 2 event happen in state 2, place of supply will become state 2. Let me repeat it. Why? If we ask a question, this time his recipient is unregistered. When I have an unregistered recipient, the place where event is held will become place of supply. Can you move forward? Yes? Any doubts? Getting into transportation of goods. Generally, transportation of goods and all modes of transport is discussed here, be it air, sea, or it is going to be road. When it comes to transportation of goods, if this transportation of goods services are provided to a registered recipient, DHL provides services to a limited company who is registered, or another transporter company provides services to a registered company. A particular airline provides services to another registered company. We are here not bothered about from where to where goods goes. Let me repeat, that is the strategic element here. We are absolutely not bothered about goods can go from location A to location B. We are not bothered. We are only bothered is your recipient is registered. Yes. Give his GST number, I will know his place of supply. I will know his location, then I will decide a place of supply. When it is more important? When the recipient is unregistered. If the recipient is unregistered, place of supply will be the place where the goods are handed over for transportation. Let me repeat. The place where the goods are handed over for transportation, not the destination of the goods. Where I am starting the transportation of goods, that would become place of supply. For example, a transport company in Bombay transport goods for a individual who is stationed in Tamil Nadu, Chennai, all the way from Bombay to Chennai. The person who was stationed in Chennai was earlier living in, now stationed in Chennai, was earlier living in Bombay, want to transport all his goods from Bombay to Chennai. He gives to the transporter all his goods for transportation at Bombay. Place of supply will become Bombay, Maharashtra. But here a lot more challenges are associated than what we expect. One of the important services of transportation is transportation of goods by road, otherwise very popularly called as GTA services. This GTA services is liable for reverse charge? Yes or no? There is a transporter who is located in Maharashtra. He transports the goods in his lorry and issues a consignment note which clearly says that the goods moves from Bombay to Chennai. And here you have a recipient in Tamil Nadu a registered recipient under GST, and this registered recipient in Tamil Nadu, no doubt, is liable to pay tax under reverse charge. Agreed. As intrastate supply or interstate supply. Can we able to appreciate this question? Supplier in Bombay transport the goods to a recipient in Tamil Nadu. Now the question before us is it a transportation of good service? Yes. What is the place of supply? Recipient is a registered recipient. Then place of supply automatically will become what? Tamil Nadu. Location of the recipient, Tamil Nadu. Now, whether it is intrastate supply or interstate supply, I have to pay reverse charge, no doubt about it. Do I need to pay it as intrastate or do I need to pay it as interstate? For me, 9(3) applicable or 5(3) applicable? Do I need to refer CGST notification and SGST notification, or do I need to refer IGST notification? These are the question comes. I'm sorry. Somewhere this is the question. And all these problems will be raised 3 years from now. Nobody will ask us today questions. Because a lot more people yet to be aware of all this. That's all. They're all comfortably thinking, as long as he pays something, leave him here. As of now, situation goes in that fashion. Yes. Intrastate supply, interstate supply. Interstate supply. Why? Location of supplier is Bombay, place of supply Tamil Nadu. Very interesting to note. A supplier in Namakkal moved his goods from Namakkal to Bombay. That same supplier now carries goods from Bombay to Tamil Nadu. Possible? Yes or no? Here, he gives a consignment note. The heading of the consignment note, so and so roadway, so and so transporter, where address is very cleverly stated as what? Tamil Nadu. And the recipient here in Chennai, which is the same company, who is liable to pay tax under reverse charge. This time, it is intrastate supply, interstate supply. Intra or inter. Goods comes from Bombay to Chennai. Goods comes from Bombay, Maharashtra to Chennai, Tamil Nadu. Intra. Sure? Yes? For all of us. Inter. A supplier in Tamil Nadu. See, the problem is the whole industry operates. Goods comes from where? Bombay? Bombay to Chennai? IGST. Goods goes where? Maharashtra? Where? Pune? IGST. Goods goes where? Kakinada? IGST. Not like this at all. Supplier location and place of supply will decide whether it is intrastate supply or interstate supply, not movement of goods. The classic example that we discussed a minute before was location of supplier Tamil Nadu, location of recipient Tamil Nadu, place of supply Tamil Nadu, movement of goods alone from Maharashtra to Tamil Nadu. Somebody who bothers about movement would say interstate supply. Somebody who reads law, section 8 of IGST Act, location of supplier Tamil Nadu, place of supply Tamil Nadu, transaction is a intrastate supply. CGST, SGST applicable on reverse charge. Now come on, understand. When we zero down so much level, mark my word, I will give you an open bet. Definitely on reverse charge, all along decision for a few of our clients goes by the client itself. Just call, are you paying on freight reverse charge? Appadiyan kepam first sometime. Reverse charge applicable. So now 2.5 years over here, now you should be awakened. Then, no sir, we are paying, you told, no, that time itself, after that we are paying. Oh good. Now how you decide? Sir, very simple, sir. When goods goes to Coimbatore, intra. When goods goes to a next state, then it becomes what? Inter. Uh-huh. Transporter who carries? Who comes from Bombay, sir, always. Bombay transporter carries means it is not intra at all. It is what? Inter. Let me repeat. This is one area which is going to hit a majority of preferably the SMEs. Let me repeat it. A little larger companies have already awakened on all this concept. SMEs have to be, yet to be, again, they have to be told this is how your decision has to be. But one good thing is, today a lot of consignment note, the respective transport company says, pay IGST only. They stamp it in the bill and issue it. Consignment note and issue it to the person. So that is one clue. He takes a decision now. Instead of allowing the respective recipient to take decision, they say pay IGST only, pay CGST, SGST only. Oh, those are all interesting aspects of it. But any case, exceptional transactions are there when assessee deals with them. One of a very recent amendment in transportation of goods is, sometimes goods are destinated to a place outside India, that is, from Delhi, goods goes to US. Supplier in Delhi, recipient in Delhi, but goods alone goes to US. In those circumstances alone, the supply would be treated as a interstate supply, or to put it in a different way, the outside destination, other territory or other country would be treated as a place of supply. Just to encourage those export related activities, to ensure assessees to take throughout India credit irrespective of the place where they are located. For those purposes alone, this small amendment as a proviso brought in from 1st February 2019. Prior to that, it was not there. In case the destination of the goods is going to be outside India, then that would be the place of supply. When my destination is outside India, obviously supplier will be in that state, recipient also will be in that state, but because goods goes outside India, it is treated as other territory and the transaction would be treated as a interstate supply. It will not be treated as a interstate supply. Let me repeat, it is not an intrastate supply, it is an interstate supply. Specifically they have brought it. So these are all some small aspects of transportation of goods. Getting into species by itself is transportation of passengers. When transportation of goods has its own model and methodology associated with it, transportation of passenger services was different. As I earlier mentioned, if services by an aircraft is provided to a registered recipient who buys tickets, then the whole show is easy to that aircraft. Place of supply will be the place where the recipient is located. But in case, if the services are provided to unregistered recipients, the place where the passenger embarks for a continuous journey, that would be place of supply. Meaning thereby, if it is going to be Chennai, Bombay, Jaipur, Delhi, Chennai, a round trip ticket for lot of us sitting here, if this travel is a business travel, then place of supply for the entire travel is Tamil Nadu, because the registered recipient is located in Tamil Nadu. To the contrary, if it is a pleasure trip for that individual or a personal trip for that individual, Chennai to Bombay, place of supply is the place where the passenger embarks. So Chennai to Bombay, I should bill from Tamil Nadu GST. Bombay to Jaipur, I should bill from Maharashtra GST. Jaipur to Delhi, I should bill from Rajasthan GST. Delhi to Chennai, I should bill from Delhi GST, because the place where the passenger embarks, those are all going to be place of supply. Let me repeat it. Somewhere when it comes to recipient is being registered, is of late becoming a gift to certain organizations. Now, nothing right here. Otherwise also, every place it is going to be IGST bill. Now it will not be IGST bill. In every location it is going to be a intra-state bill as CGST, SGST. That's all. Absolutely beyond that nothing. But technically, when there is a continuous journey, the place where the passenger embarks, that would be place of supply. Telecom, which comes with its own challenges in the industry, very comfortably in a dedicated section where equipment is installed, a leased line connectivity is there, or any towers or any physical existence of equipment is attached, then the place where such tower equipments are all located, that will become place of supply. In case of postpaid billing, the place where the bill is going to be sent, that would decide a place of supply. In case of prepaid billing, any case I have an address on record as part of KYC norms, that would be my place of supply. Very comfortably, both for all three services of your insurance, banking and telecom, it is closed. Very simply they could, if the other party is registered recipient, okay. If the other party for banking and insurance services is not registered recipient, then also okay. On a very simple reason, because the other party is going to, any case, have address, that whether it is a valid address, that person stays, that address on record is a word defined under IGST. Address on record means address available with the supplier. Need not be updated. That person need not stay there. Any address can be considered as an address which is being located over there by that respective person. Same in the case of insurance, which is in line with banking services with regard to place of supply. In case of advertisement services, more specifically, advertisement services provided to central government, state government or local authority, then the place where, or based on the nature of advertisement, place of supply need to be determined. Maybe it is a national scheme, something like which was announced on the Independence Day, or a scheme like Ayushman Bharat, where throughout India that message need to be carried. So Times magazine or Times of India in its first page will carry this scheme, for which government will pay, here take X amount of rupees, or just for an example take 68 lakh rupees, and all 21 locations wherever they print, first page will be this scheme. Now this 68 lakh rupees should be enjoyed by the corporate office, or all this money need to be distributed to all locations. 21 press I have, 17 states it is spreaded. So, do I need to raise one single bill and close it, or 17 individual bills need to be raised? Can we able to appreciate this discussion? Yes? Is it need to be 17 individual bills need to be raised, or one bill to Government of India? When we get in, read this along with IGST rules, it would come out and say to us 17 individual bills need to be raised based on the circulation of that newspaper. Different advertisements, different parameters are given. Now my intention here just to say Why this is only to government? Why not to a private company? Very simple. A private company will give its GST number. The moment a GST number is given, I have a registered recipient. When I have a registered recipient, I know his place of supply. When it is government, I cannot say central government located in Delhi, place of supply Delhi. That scheme is going to, benefit is going to go to all states, then it has to be distributed to all. In any case, intention is a few services that we discussed over the last all are services that are specific in nature. On a nutshell, pick up from here: training and performance appraisal services, organizing of event, followed by transportation of goods, transportation of passengers, banking, insurance, and all these services relating to banking, insurance and telecom. These services will have two entries: registered recipient, answer is different; unregistered recipient, answer is different. Followed by my services is a specified services, or immovable property services, or admission to event services. If this be the case, immovable property, location of immovable property, admission to event, the place where event is held, or specified services, the place where services are performed. If a transaction is not covered by all these entries, then it will go to general entry. In fact, someone should read vice versa, not forward way. If I am not covered by specific, then only I am covered by what? General. If I am covered by specific, then I have to go only there. The discussion that we have here is supplier is located in Tamil Nadu, recipient is located in Andhra Pradesh. It is a transportation of goods. The goods are transported from Gujarat to Rajasthan. What is the place of supply? See, at least today we are all gifted, we are all qualified. Last attempt, CA final question. Supplier is located in Tamil Nadu, recipient is located in Andhra Pradesh, goods moves from Ahmedabad to Jaipur, Gujarat to Rajasthan, place of supply. If my recipient is registered, Andhra Pradesh; if my recipient is unregistered, Gujarat, the place where the goods are given for transportation. Let me repeat it. A natural doubt will come. How recipient in one location, goods are stationed in another location? Come on, in a service industry, all this is possible. In a goods industry, this question is not possible. In a service industry, worst thing is 4 different locations I will have. My goods will move from a different location and to a further another location for various purposes. I am located in a different place, my supplier is located in a different place. So any case, all that I want to drive home is these are the exceptional discussion associated with it. But a general discussion we will never have regularly. All that we will have is supplier outside the state, recipient in state, interstate supply, or supplier and recipient within the state and place of supply is also within the state, then it becomes the same state. So this is the broader discussion on services. So having said, what just we have completed is just the domestic transaction. Similarly, we have an international transaction associated with it, plus a small update on GST audit. All this we will catch up after a 10 minutes break for tea. Thank you all for effective and patient listening. Thank you. Welcome back. In case of international transactions, when it comes to goods, it is handled by section 11. Similarly, when it comes to services, it is handled by section 13. As far as goods is concerned, a very simple discussion. probably two words becomes important: import of goods, export of goods. And these words are also, the government has not complicated this word. They somehow want to retain the customs definition into it here also. Taking goods from a place outside India to a place into India would be treated as import of goods. Similarly, taking goods from a place in India to a place outside India will be treated as export of goods. So when it comes to this definition of import of goods and export of goods, it was in tandem with customs law. And when it comes to place of supply, it was little more easier. When it comes to import of goods, the location of importer is place of supply. When it comes to export of goods, the place where the goods are exported, that will become place of supply. So every importer is going to be located in India, place of supply will be always India. Whenever goods goes outside India only, we will call it as export. The place where the goods goes becomes place of supply. So somehow from a import-export perspective, the taxability became little advantageous to the government from a goods perspective. But when it comes to service perspective, it takes its own toss. Import of service. Location of supplier should be in non-taxable territory. Location of recipient should be in taxable territory. Place of supply should be in taxable territory. Then only it will be treated as import of service. So, I am a supplier located outside India, provide some services to a recipient in India, and the recipient in India pay me in foreign currency or in some currencies, and for that supply of service, place of supply should be in India, taxable territory. Then only it is treated as import of service. If it is an import of service only, reverse charge is applicable. Let me repeat it. Not all foreign receipts are export of service. Not all foreign payments are import of service. Somehow this thought will always be there among all those small SME organizations. Sir, I receive money in foreign currency. Sir. Receive. If you receive money in foreign currency, that is one of the conditions. Just because money received in foreign currency doesn't mean it is an export of service. Similarly, there would be situations where organization need to make payment to foreign country. Just because they make payment in foreign currency to a company located in outside India, it doesn't mean it is import of service. It has to satisfy this definition. Supplier outside India, recipient in India, place of supply in India, import of service. Export of service, similarly. Supplier in India, recipient outside India, place of supply outside India, money should be received or billed, it should be billed in, or money should be received in convertible foreign exchange, but for specific people. Last entry, last discussion, supplier and recipient should not be a distinct person, meaning thereby both of them should not be a same person having one fellow office outside India, one fellow office in India. It should not be the same company, A Limited, Indian office, A Limited, Dubai office. Possible? Possible, not possible? Yes. I am not talking of company incorporated outside India. No. I am not talking of A Inc. I am talking of A Limited, company incorporated under Indian Companies Act, having an office outside India. Canara Bank Limited, India, Canara Bank, Singapore. Same company. But only thing is foreign branch. This is Indian branch. Any transaction happens among them, then it is not treated as a export of service. Or this is a condition. Let me repeat it. For export, there is a condition. Supplier should be in India, recipient should be outside India, place of supply should be outside India, money should come in foreign currency, supplier and recipient should not be distinct person. If a transaction satisfies all these 5 conditions, then it will be treated as export of service. Let me repeat it. When it comes to import of goods, export of goods, it becomes a little easy. But when it comes to services, it comes up with its own challenges associated with it. And with disclosures in Schedule 3 balance sheet or a non-corporate balance sheet also for various purposes, where different informations are shared, somehow unless this understanding is not firm, often we are exposed to different notices from the government saying that all foreign payments are import of service. Even today there are matters that are pending before the courts where supplier is in foreign country, recipient is in India, place of supply is foreign country. Can you able to appreciate this discussion? Supplier in foreign country, recipient is in India, place of supply for this transaction is what? Foreign country. Somehow at a lower level, officer is a little reluctant to understand this logic. We time and again repeat, see, import of service means place of supply should be in India. Here for this transaction, place of supply is outside India. This is not an import of service. When it is not an import of service, it is not liable for reverse charge. Whenever we try our best, again, getting relief at a lower authority is always a little tough on these matters. It has to be litigated and then it has to be won. Coming back here, yes sir.
How does this actually differentiate from a non-resident taxable person?
Non-resident taxable person who will come to this country and he will do something positively as a business here. Here you have a person who will not come to this country, who is stationed outside the country, and from there he is supplying services. As the easiest example to you, it is an international photographers exhibition, and to that international photographers exhibition, one of the famous photographer from Japan brought his 8 lenses, which all worth somewhere around 5-6 lakh of rupees. While bringing those lenses, he cleared those lenses through the customs channel, paid necessary customs duty along with IGST, brought those lenses, participated in the international photographers exhibition, makes a mandatory registration as a non-resident taxable person. Whenever he sells those lenses, makes a GST invoice, allows the other person to claim credit on his import. Whatever goods he brought, he is entitled to take credit, but for goods services consumed in the country, he is not eligible for credit as per 17, and files his return, walks out of this country. Registration is valid for a start to end date. 5 days before the commencement of business, he can take registration. Here, there is a supply of goods or a supply of services occasionally happens in India by a person who is not located in India. It is a company registered outside India. Then he is located. Location of supplier is outside India. Location of supplier is not here. This is the difference that we have to draw. But the real challenge in these transactions is, if he is a service provider, I comfortably gave you an example of goods. Okay. The real challenge will come, I'm not sure, this Justin Bieber, who came to Justin Bieber, am I right? Justin Bieber, who came to Maharashtra, Bombay, and then had his concert and walked away. Maybe here all interesting personalities. For him, NRTP applicable or not is a subject matter of discussion by itself. So his supplier location is in India or supplier location outside India. When he sells the tickets, whether the tickets sold here, ticketing organization is different, contracting organization different. $1 billion question, including your international player who comes for IPL. Beautiful case studies we have, no doubt about it, which cannot be discussed or as part of this discussion at all, but just whether they are covered under NRTP or not is a separate analysis which need to be done. But when it comes to services, I do agree there is an element of challenge associated with it. But again, we can make certain distinctions based on how the contract is being there, how it is drafted. All this will make a difference associated with it. Coming back here, in case of import of services, there is a possibility how the services is not provided in India, services, place of supply may be outside India. Similarly, in case of export service also, vice versa is possible, where generally export of service means location of recipient is outside India and place of supply is outside India. But very interesting to note, supplier is in India, recipient outside India, recipient receives money in foreign currency. Both supplier and recipient are not distinct person, one downside. Place of supply is location of supplier, not what? Location of recipient. If it is location of recipient, then it becomes what? Export of service. But it is here. Now, in transactions like this, whether it is export of service. See, technically the purpose of section 13 itself to decide whether it is an import of service or export of service, place of supply becomes a crucial element here. Coming back here, as usual, like how section 12 was drafted, similarly they have drafted section 14 with here and there little modifications. When it comes to section 13, international transactions, section 13 very clearly says supplier of service or recipient of service, one fellow. Among these two fellow, one fellow is located outside India. When both of them are in India, section 13 is not applicable. That is what is the indirect message of section 13. Supplier also India, recipient also India. I am sorry, not possible. Then it is section 12. When we go back to section 12 heading will use a term called as location of supplier and the location of recipient in India. See, somehow weightage to these headings, section headings, has to be given in a great way when it comes to the understanding than a very preliminary understanding that is being taken on other aspects. Coming back here, location of supplier or location of recipient is outside India, then section 13 is applicable. As usual, earlier they have highlighted, if a service is not covered by a specified list, they have entry 3 to 13. If a service is not covered by the specified category of services list, then it will be covered by general entry. Again, generally, location of recipient is going to be place of supply. What is going to be the location of recipient? That would be the place of supply. If this be the situation, now to start with, what and all is covered here? Same. Immovable property based services, performance based services, event based services, transportation of goods, transportation of passengers, specified services including intermediary, followed by onboard conveyance of a service, OIDAR services. These are all the broader heading that we will be discussing. To start with, in case of performance based services, whenever a service need to be performed on a goods, whenever a service need to be performed to a representative who is a recipient's representative, then the place where the service is performed, that would be place of supply. Let me repeat it. They have never told this transaction, that transaction. They simply say, whenever services need to be performed in connection with goods, the place where the service is performed, that would be place of supply. Here we have a company whose main business is technical inspection and certification services. Who will come, check the machine, inspect, give a certificate as per your contract. Yes, this machine is executed. A company located in UK signs an agreement with a company located in India, agrees for a rate card, says your technicians per diem rate will be so much, travel this kind of technician, this is the travel cost allowed, and on completion of the report approved by our team in UK, you can raise invoices. Interesting to note, first assignment given, go to Dubai, verify this mission and come back. Fellows went to Dubai, company located in India, supplier located in India, recipient located in UK, but went to Dubai, reviewed the mission, inspected, came down, prepared the whole certificate, sent to UK, received money. Money came in foreign currency. All are agreed terms. Place of supply is India, Dubai, UK. Goods are stationed in Dubai. Goods are stationed in Dubai. Went, inspected the goods and then came to report and all prepared in India. All this writing, okay, complete writing, including that Mane Tene Ponmane corrections, all happened in India only. Raw report structure came from Dubai. Yes, mission is located in Dubai. Yes. Quick. Place of supply. Goods were located in Dubai. Place of supply is Dubai. Service is performed in Dubai. Because my aim is to inspect the goods and my whole aspect is based on what? Goods. Very interesting to know this time. Same company in India, Tamil Nadu, was called to go and inspect a mission which was just now imported in Bombay. They went, inspected, came back, prepared a report, sent to the company in UK. Place of supply. Place of supply. India, Tamil Nadu, India, Maharashtra or UK? Maharashtra. Now, export of service, not export of service. What is export of service? Supplier should be located in India, recipient should be located outside India, place of supply should be outside India. Supplier in India agreed, recipient outside India agreed, place of supply for the machine that was imported in Bombay. Place of supply was what? Maharashtra, in India. Export of service, not an export of service. Not an export of service. But unfortunately, as per the agreed contract, I will receive money only in what? Foreign currency. Transaction is leviable to GST. It will not enjoy the exemptions which is available under section 16 of IGST Act, zero rated supply, export of services. This is not export of service. Let me repeat it. This is the downside of this performance based services. If a service is performed in India for a client who is located outside India, it will continue to be a transaction leviable to tax under GST. It cannot enjoy the exemption that is eligible for a export of service. because it does not satisfy the condition for what? Export of service. Can you able to appreciate this discussion?
Same thing you
Yes.
draw for software also.
Ah,
Software or any technical service.
good. Software or for any technical services. Problem is, in my list, I don't have software.
Performance based.
Services performed in a goods which are physically made available by the supplier of goods or by his agents to the other person. So those criterions and all will not be matched. So because of that reason, for a software, this would not be applicable. I'll give you another situation where yes, I'll come, yes sir. Now, what would be the challenges in a software? A company which is stationed at Karnataka was a big time software company, signs up an agreement with a company which is located in Finland to maintain his mainframe server. The AMC is signed to maintain the mainframe server and to ensure the data that is stored in the mainframe server is authentic, adequate, security is maintained well. Now, very interesting to note, the fellow who is located in Karnataka will never move at all. Sitting in the Karnataka, connected through a leased line or through a virtual private network, he will control the whole configuration of the Finland company's server located in Bombay. Can we able to appreciate this discussion? The end information technology asset is located in India. Though I provide services to a fellow located outside India, receive money in what? Foreign currency. My place of supply would be here. These are all the challenges that we are finding it difficult. I'll go one step forward. At least under earlier law, they used a word called as electronic network. Let me repeat. At least under earlier service tax law, we had this similar provisions. Place of provision of service 2012. Place of provision of service 2012 will use a word called as electronic network, for which we went to Information Technology Act 2000, and there we told electronic network means this. My brother in IGST Act drafted it as electronic means. Now, electronic network is a wide word or electronic means is a wide word?
Electronic means is a wide.
So,
Including electronic components.
sir,
Electronic means including components.
so one of a high-end technocrat stationed at Japan, 86 years of age young, sits at Japan head office of a particular company. From there, sitting in the video conferencing, assist assembling that happens in Chennai Sri Perambatoor, for which a technocrat payment is made to this gentleman who is located in Japan by the company located in Sri Perambatoor. Place of supply is Japan, India.
He delivers from Japan.
He sits at Japan in the conference hall, which is connected to a VC. That VC will project what installation happens in the floor of a particular company in Sri Perambatoor. Place of supply India, place of supply Japan.
India.
Electronic network will give a different meaning. Electronic means will have a different meaning altogether. Here, supplier is located outside India, recipient is located in India, performance of these services. No, he is sitting, we see he sits there, he comes office there, he goes home. End of the day, asset is assembled, installed, erected in India. Place of supply is India. These are all the challenges. I'm bothered a lot when it comes to some of the back office organizations. Some of the back office organization has a practice of doing all the work and at the end sharing everything through mail. Whether all these fellows going to call all these as what? You are connected through electronic means. Oh come on, without electronic means nothing will happen. But somehow the discussion has to get limited to goods. The discussion cannot go beyond goods. When something in connection with the goods, if I do something, then yes. Are there any exceptions to this discussion? Yes. A very recent amendment came out and told in case of job work, yes, this section is not applicable. In case goods are imported into India, some work need to be done and the goods are exported out of India without use, again this section is not applicable. Let me repeat it. Whenever you say a specific section is not applicable under place of supply, then it will go back to general entry. When you go back to general entry, location of recipient will become what? Place of supply. As simple as that. It is a company whose main business is shipbuilding activity. A foreign ship came to the Kochi port and the ship was completely refurbished after about 8 to 10 months. After 8 to 10 months, the ship was allowed to move. And very interesting note, the ship was originally imported into India for the purpose of refurbishment. After refurbishment is over, the ship was exported out of India. In a transaction like this, a company which is stationed in India, who does all these activities, for him, this performance-based services will not be applicable because that goods was not used in India, which is ship, not used in India, it was allowed to be exported out of India. So let me repeat it. But for this exception, any other services performed in India on behalf of a foreign fellow, or the supplier is outside India and the recipient is in India and it is performed in India, place of supply will be the place where the services are performed. It has a lot of link to something to deal with goods than anything else. In case of services, yes, it is applicable. Repair and maintenance services, inspection services, certification services, marketing services are the strategic things which need to be taken care on this entry. But for it, no other services would be brought in over here. In case of all those entertainment industry, maybe all those production work, post-production work, those are all a little they have to be careful because sometimes services are not provided to the recipient. Services are provided to the representative of recipient. Let me repeat it. Services are not provided to recipients. Services are provided to representative of recipient. A makeover consultant from France come and does a makeover services for an artist who is going to act in a particular film in Chennai, India. Then, of course, the production house will make payment. But that particular artist is done a makeover services because he or she, being an artist, is a representative of recipient of service. If any services are provided to a representative of recipient of service, the place where the services performed, that would be place of supply. Now, take up a situation. Production house is here in Tamil Nadu only. Makeover consultant is in France only. This time outdoor shoot. So everybody went to US. The makeover consultant flight all the way to US, did the makeover services in US. Place of supply? US. Supplier? France. Recipient? India. Import of service? Not import of service. Supplier located in non-taxable territory. Recipient located in taxable territory. Place of supply? Non-taxable territory, taxable territory. Non-taxable territory. So import of service, not an import of service. Not an import of service. When it is not an import of service, reverse charge applicable, not applicable? Huh? Applicable, not applicable? Not applicable. Let me repeat it. This is where I concluded. Not all foreign payments are import of service. Not all foreign receipts are what? Export of service. Both has its advantages and disadvantages. Need to be decided individually based on place of supply. Immovable property based services. Any services directly or indirectly connected with immovable property, could be construction, could be architect, could be designing, could be structured walkthrough, or real estate agent services, or it is going to be renting, hiring, accommodation, leasing of an immovable property. Then the place where the immovable property is located, that will be place of supply. No different from a domestic transaction. Domestic transaction also we told location of immovable property is place of supply. International transaction also we say location of immovable property is place of supply. Only thing is, here a property is taken by a software company. Software company is in Tamil Nadu, has a client in US, is one of the biggest client for this software company. 4 employees of this software company, just 4 employees of this software company, work in client location for the purpose of development, all that stuff and all. That 4 employees has to stay. Instead of taking a hotel, putting them all there and the cost goes up, a standard model, take a apartment on hire, sign an agreement, pay monthly that owner a money. Allow all these 4 fellows to use this apartment. Question before us. A software company who makes payment for all this. Location of the property is US. Supplier of services US. Recipient of services India. And it is an import of service, not an import of service. Import, not an import.
Not an import.
Software company is in Tamil Nadu, India, pays rent for a property outside India, and which was used by their own people who stay there, or from here somebody go as a consultant for meeting, whatever be it. The owner of the property is obviously in US. Now, import of service, not an import of service. Import, not an import. Not an import. So reverse charge applicable, not applicable. Not applicable. See, let me repeat it. These are the interesting aspects of it. When a company in India books a hotel outside India, I'm sorry. Just like that, officer cannot touch the notes to accounts, foreign currency expenditure, hotel booking, travel, all this into 18%. No stories like that. Not all foreign currency expenditure would land up in import of services. It is to be decided individual transaction wise. Coming back here, apart from immovable property services, event, same logic is maintained. In case of events, if both, at least in domestic law, they segregate it. If you are admission, your stand is different. If you are organizing, then your stand is different. Both in case of admission and organizing of event. The place where the event is held, that would be place of supply. As simple as that. Where the event is held, that would be place of supply. An Indian firm will host its event outside India. Place of supply is the place where the event is held. Very interesting to note. We'll collect money from people who are all located outside India for admitting them into the event. In all these circumstances, location of supply, location of the event, the place where the event is held, that would be the place of supply. Moving forward, a rare phenomena, because of certain business challenges, decisions are taken like this. Now, why I highlight so much is, rarely organizations do sign up agreements saying that few activities will be performed in taxable territory, a few activities will be performed in non-taxable territory. Technically, one agreement should not be signed like this at all. I will also do some certification in India, I will also do some certification outside India, and all put together, this is my fees. I am sorry. So, in case because of business exigencies or various other reasons, if a contract is signed like this, then the biggest disadvantage is even a small portion of service happens in taxable territory, the entire transaction will be treated as happened in taxable territory. See, sometimes organization do commit. For a global vendor, for him he don't want a contractor for India. For him he want a contractor for Asia as a whole. More specifically, at least he comes out and says, India, Nepal, Bhutan, Bangladesh, all this place you do this event. Okay, they'll accept for one price and come. Good. Major events will happen in Nepal, Bhutan and other countries only. In India only 2 events will happen out of the 16 events. Entire transaction is brought into the loop of place of supply in taxable territory. Even a portion of transaction happened. It could be based on immovable property, it could be based on performance based services, it could also be based on event based services. I am not getting which service, but all that I want to highlight here is above 3 services, even a portion happens in India, the entire activity would be treated as India. In case of intermediary services, any services of intermediary nature, then place of supply will be the location of supplier, where somebody is not going to provide main services, he just connects supplier and recipient, that's all. Then that person is called as an intermediary. Location of that supplier would be place of supply. What is the challenge? Very simple. Supplier will be in Tamil Nadu, India. Recipient will be in France, Europe. Very interesting to note. Recipient will pay in euros to this supplier. However, what this fellow did is nothing. He connected one fellow in Tirupur to this France fellow. Ensured the consignment goes comfortably reach there, for which as a commission agent he get this money. Entire money received by the Indian intermediary who connected the Tirupur garment manufacturer and the France supplier. Yes, that activity would be not treated as an export of service. Straight away it is not an export of service. Why? Same discussion. Supplier in taxable territory, recipient in non-taxable territory, place of supply is in taxable territory. Location of supplier is going to be place of supply. So these are all the disadvantage of this. Specifically 13.4, 13.8 are the careful entries when it comes to section 13. Both will pull and export into a taxable transaction, something like this. So every single commission agent in India who receives commission from his suppliers in foreign country are brought into the net. But the fashion in which intermediary definition is defined by using word called as by whatever name called and all apart from agent, arhati, factor, broker, widens the scope of the services, and where really a person does not have anything to share or anything to do, he just connect two people only, a student in India and a university outside India. I just connect two people. Then very simple. Activity will get covered under intermediary irrespective of he receives money in foreign currency. It will be leviable to tax as it is not the export of service. Apart from this, few services are brought in. One will be all those services provided to NRO, NRE account holder, and one more services could be renting, hiring of motor vehicle, except for aircraft and ship. But for aircraft and ship, all the other renting activity, location of supplier will be place of supply. It will not be the location of recipient. It will be a contrary understanding relating to the normal one. In case of transportation of goods, which is not applicable for courier and mail, other than courier and mail, this place of supply discussion is applicable, where in case of transportation of goods, destination of goods will become place of supply. If my goods goes from Chennai to New York, place of supply is New York. If my goods comes all the way from Hong Kong to Chennai, place of supply is Chennai. So the destination of goods become place of supply, which will be contrary from domestic understanding. In a domestic understanding, the place where the goods are handed over for transportation. Whereas this is completely against. Destination of the goods become place of supply. Why? Domestic law, international law. That's all. Nothing great. International law, I should follow certain codes. So based on that, they went. So coming back here, intention is this: in case of international transaction for transportation of goods, place of supply will be destination of goods. All those services provided in connection with transportation of passengers. In case of transportation of passengers, nothing great, no changes. The place where the passenger embarks, that would be place of supply. So do we have any changes in our understanding? No. Goods, we have a change in understanding. For services, there is no change in understanding. On-board conveyance of a service, like how goods are boarded, where it is boarded, that becomes place of supply. When it comes to services provided on board, the first scheduled departure, that would be treated as place of supply. For an aircraft, if the first scheduled departure for that aircraft is going to be India, Chennai to, let's say, Dubai, then the first scheduled departure is Chennai, place of supply will be Chennai, India. Similarly, if the first scheduled departure for this aircraft is going to be Dubai to Chennai, then place of supply will be Dubai. So that is how it has to be identified when it comes to all those services provided on board. Goods provided on board, the place where it is distributed, where it is taken. Coming back here, when it comes to OADAR services, all those online database access retrieval services. In case of OADAR services, this services is concerned the location of recipient or where the recipient is located, that would become place of supply, subject to satisfaction of all these conditions. That fellow should not use a SIM which is given in India. That fellow should not give you a billing address of India. That fellow should not use a credit card or a bank account which is relating to India. That fellow IP address should not be an address from India. That fellow should, his sign up address, billing address should be outside India, not be India. If a person satisfies all this condition, for OADR services, location of recipient is going to be place of supply. Some of those organizations who provide certain services to foreign country through web pages or whatever model they provide services, they'll have small time clients, they'll have a small software hosted on the website, will be used by others on a payment mode basis. So whatever be it, all these services will be the services where the recipient is located, that will become place of supply, subject to a condition that all these conditions are satisfied by the person. If at least any two condition is not satisfied, the recipient will be treated as a person located in taxable territory. This sums up a discussion relating to place of supply from international transaction. Let me repeat, this topic will only open up our understanding, and a topic of that size has a challenge. Until we are not aware of certain provisions, or in specific we have not touched it up, maybe we will feel our understanding is good. Unfortunately, when we start reading it with little more patience and understanding the words associated with it, our understanding will go further deeper into it and it gets widened. Coming back here, quickly getting into some of those recent changes under GST audit report, or for the purpose of GST audit, is, I'm sure everybody sitting in this room, 9C form is being notified by government, and this form 9C has two parts, part A and part B. Part A is a reconciliation statement, part B is a certificate that is issued by a chartered accountant. And part B again has two types of certificates, something like how we have an income tax audit. If the income tax auditor, or I'll rephrase it, the statutory auditor and the GST auditor is the same person, the mode of the certificate is different. If the statutory auditor and the GST auditor is going to be a different person, or an income tax auditor and a GST auditor is going to be a different person, then the mode of the certificate is different, that's all. But for it, nothing great when it comes to the broader understanding. This part A has 5 subsections or 5 internal divisions, where a basic information is captured. Second part, turnover information is captured. Third part, input tax credit information is captured. Third part, tax paid information is captured. Fourth part, input tax credit information is captured, and fifth part is the recommendation of the respective GST auditor in case any money payable by the assessee. When we come back here, basic information, reconciliation of turnover declared in the annual financial statement with the GSTR 9. Annual return will be filed by the assessee and given to the respective GST auditor, who is in turn now going to reconcile the annual return with the financial statement. Reasons for differences can always be established and done. Part 3, which will discuss about what are all the taxes paid, whether they are paid correctly as per books and as per annual return. Part 4, reconciliation of ITC between books and already filed in the return. Part 5, any recommendations of the auditor in case if there is any tax liability associated with it. As part of GST audit, what is the auditor is responsible for? For everything. Absolutely everything. Classification of goods or services, valuation of goods or services, compliance of the law, followed by all those other compliance, availment of ITC, reversal of ITC. For everything, the respective GST auditor is responsible. In fact, he signs a certificate all along. It is true and correct. Thank God they converted into true and fair. But for this last amendment, true and correct, I'm sure all of us sitting here can understand the difference between these two words. But coming back here, parking all those basic discussion, upfront sometime during July 2019, a clarification was given that if an assessee's turnover during the financial year 17-18 from July to March crosses 2 crores, then only GST audit is applicable. Because one doubt was always revolving. What is the turnover for GST audit? 2 crores of aggregate turnover, understandable. But having said 2 crores of aggregate turnover, there were doubts. April to March I have to see for 17-18, or July to March I have to see, for which government through the press release has confirmed July to March. If an assessee's turnover exceeds 2 crore, then only the GST audit is applicable. 2 crores of aggregate turnover. So here we have a client before us whose Tamil Nadu turnover is 60 lakhs, Andhra Pradesh turnover is 60 lakhs. Total turnover together is 120 lakhs. Very interesting to note. Their factory is located in Tamil Nadu, only one branch is there, that is located in Andhra Pradesh. Whatever goods are sold in Andhra Pradesh are manufactured in factory. So the Tamil Nadu factory manufactured 90 lakhs worth of goods and supplied to Andhra Pradesh. So the question before us is, when you look Tamil Nadu GST R1, Tamil Nadu 3B GST returns, from Tamil Nadu sales 60 lakhs, stock transfer to Andhra Pradesh 90 lakhs. And of that 90 lakhs goods, 60 lakhs goods is sold in Andhra Pradesh. Let's balance or all is there in the stock. Question before us is, GST audit applicable, not applicable? When we see their P&L account, 1 crore 20 lakhs. Yes, Assi took registration only after July. So I don't want to think April to June turnover and all. We'll keep it simple. July. GST audit applicable, not applicable. When we go back to this question, aggregate turnover will include all kinds of supply. Stock transfer from Tamil Nadu to Andhra Pradesh, 90 lakh rupees will be treated as a taxable supply. It will be added in the aggregate turnover. Tamil Nadu standalone turnover 60 lakhs, Andhra Pradesh standalone turnover 60 lakhs. Movement of goods from Tamil Nadu to Andhra Pradesh, which is a stock transfer, which is a supply as far as Schedule 1 of CGST Act is concerned, which is 90 lakhs. Overall aggregate turnover 2 crore 10 lakh. GST audit is applicable. When I see my P&L account, it will be only what? 1 crore 20 lakhs. Yes or no? This is the charm. So I saw P&L 1 crore 20 lakhs, 1 crore 40 lakhs. First of all, P&L should not be verified. Then what should be verified? Summary of GSTR1 or GSTR9 available in the system. Maybe that should be a guiding factor to decide this call. Moving forward from here, we have the updated tool. In fact, this is two versions old, 1.4. But again, the new tool, only thing is one asterisk dot which is here, that will get removed. That's not, beyond that nothing great, to make it optional, earlier which was mandatory. I like this section very much because of a very simple reason. All information will be auto-populated. Basic information. GST number, address, name, all that. Now, if you want, you can also key in it. It's your wish. Coming back here, getting into some of those reconciliation associated with it. Nothing great. We'll start with the turnover as per the respective state profit and loss account in case available. Otherwise, a state trial balance, whatever available. That will be the originating point. For unbilled revenue and advances, that is disclosed in GST, adjustments for that first need to be done. I don't have an unbilled revenue, I don't receive advances and all because I am dealing with goods. For me, advance and all is no impact. Service industry, advances are liable to GST. Goods, we have an exemption from 15th of November. So, for goods, there is no issue. Services, advances need to be taken care. Exclude the April to June turnover, which will be mentioned specifically. Exclude the credit notes that are issued. Then, in case of forex addition, valuation addition, certain additions which need to be done, it can be done. Now, I need to make certain other additions such as provisions written back, dividend received, profit on sale of asset, share of profit. All this can be part of any other adjustments not listed above. In very simple term, we are now looking table number 5. In table number 5, 5O will be there. Last amendment is, or the press release, last press release came and clarified. If you could able to know and mention it in the specific head from B, C, D, E, F, G, H, I, J, K, L, M, N, good, mentioned there. Otherwise, put everything in 5O and file it. So, end of the day, a reconciliation is done between the annual return turnover, let me repeat, annual return turnover and books turnover. A P&L, a state P&L generally will include branch transfers. In case it is not considered branch transfer, then yes, that should be considered. But for it, nothing great associated with this reconciliation. Any exempted turnover missed out in 9 or any taxable turnover missed out in annual return, that would be identified as a differences, and reason for the differences can be explained in the subsequent table, table number 6. Table number 7, from the previous table number 5, whatever turnover they have for the GST period, that is further reduced to arrive the taxable turnover. My total turnover can be further divided into non-taxable turnover and taxable turnover. That non-taxable turnover will include products like liquor or petrol which are not leviable to GST. It also includes exempted goods like few rice, wheat, all these items, plus all those services that I do, which are all exempted. From the total turnover, if I remove the exempted turnover, I will get taxable turnover. My taxable turnover as per GST audit by the auditor, and the taxable turnover reported by the assessee. If both matches, I think that is a great thing. In case of differences, reason for differences has to be explained, and assessee need to be asked to pay taxes in case of the differential turnover. Why a taxable turnover? Maybe they would have missed an invoice, they would have missed 1 month itself. There are different errors that can crop up relating to it. That taxable turnover rate-wise analysis. I have a taxable turnover of 3 crore 25 lakhs. That 3 crore 25 lakhs, how much is 5? How much is 12? How much is 18? How much is 28? Similarly, under reverse charge, I have to pay some 28 lakhs. Good. The 28 lakhs, how much is GTA? Liable at 5%. How much is advocate? Liable at 18%. How much is purchase of spare parts, which is liable at 28% initially from July, August, September, October for 9/4 reverse charge before its exemption. That breakup has to be given. arrive at tax liability. This tax liability arrived under 5% 5 RC reverse charge, 12% of product or services below 12% reverse charge. That rate of tax will match with the taxes paid by the assessee. In case of differences, what are the reason for differences has to be explained by the auditor. Reason for differences could be a turnover would have been omitted. In the books, he would have treated it as 12%, while filing not consciously, erroneously 5% would have selected, or they would have mentioned in 5% and would have filed the return, closed everything. Or it is under a wrong assumption, assessee was all along a goods or a service liable at 12%, assessee was all along charging it at 5%. All this could be the reason for a difference between actual liability and the liability discharged by the assessee, which differences will be captured in table number 11. And a summation of table number 11 will be brought into table number 10 will be brought into table number 11. ITC related information from the books. As per electronic cash ledger, I have a closing balance so much. As per book, I have a closing balance so much. Or I'll put it in this way. As per books, this is my gross ITC. As per GST, this is my gross ITC claimed by me, and generally both should match. If assessee in his 3B has taken every month, assuming 1111 lakh as CGST, SGST and IGST, 9 lakhs, 9 lakhs, 9 lakhs, all three 999 lakhs he has taken. That 27 lakhs is the gross ITC which he has availed in 3B, which will get reflected further in GSTR 9 annual return. His book also should give a proof that he has a 27 lakh credit. No, his book had a credit of 32 lakhs. Possible. That year ITC he would have availed in what? Next year. Possible? Yes or no? Entry for which is also there. That year ITC availed in next year. So 27 lakh that year he availed. Balance he availed subsequently, which can also be cross-verified. Let me repeat, which can also be cross-verified from GSTR 9, table number 13 of GSTR 9. That whether he has some subsequent credit availed subsequently. 17-18 bills, credit taken in 18-19. In case of differences, what is the differences need to be explained, which is generally reversals. Assessee will report the gross ITC and they will reverse certain ITC for ineligible ITC, or if they have forgotten to reverse during the period, subsequent year they would have reversed. Even if they have reversed subsequently, there is a still more reversal. They may reverse now and pay tax. What is the reason for differences has to be explained, and expenses wise ITC breakup. If they have availed ITC, let me repeat it. Only for expenses on which input tax credit is availed. Only for that. My assessee never availed ITC at all here. Good. This table will be empty. This is not expenses breakup. This is ITC expenses wise breakup. I availed only 3 lakh ITC. Then I have to give the 3 lakh ITC came from what? Very simple. 3 lakh ITC came for purchases. Purchases so much, 3 lakhs ITC, all 3 lakhs eligible. Conditions met. Table number 12, last line. Comparing and arriving difference became optional. Table number 14, mentioning this, yes, mandatory. But comparing this with 9 and reporting the differences became optional. What is something special in 1.6 version which is not there in 1.4? Here you can see a small red mark. That red mark will not be there, so that the system will allow, or the macros are enabled in that fashion. Even a number without there, it will accept. That is the only difference. Government never told don't give me breakup. Government says give me breakup. That breakup need not be reconciled with what he has availed. Very simple. When there is a difference, respective GST auditor gave a breakup of 24 lakhs. Assessee has availed a credit of 32 lakhs. Department will proceed in the same fashion, or 3 years later when they take it up for scrutiny, they will ask a breakup for another 8 lakhs. I'm sure all of you are all in terms of, rather I'll put in this way, all of you are all, practice will be my age. I think a lot of us can instantly answer on this. Yes. Will they ask or will they proceed with that difference? Definitely they will ask. Then why no? You file, first you file, then we'll take care. Because all the errors committed in 3B, all the errors committed in 1, somewhere has to get rectified, and a return should be available to take and compare it with financials. Then everything can happen. Maybe for that purposes they have relaxed it consciously. My submissions is that, but however, we can try our best to ensure whatever credit in your book there is 32 lakhs credit. In the return also I have availed 32 lakhs. This 32 lakhs is out of what expenses? That's all. And how much is CGST, how much is SGST, how much is IGST? Internal breakup. Here we will report it as all three together, including cess if it is there. Let me repeat, including cess, single amount reporting. I will have an internal breakup. Maybe tomorrow for various reference purposes, assessment purposes, or for all those purposes it can be given. In case assessee has availed wrong ITC, there are situations. In case assessee has availed excess ITC, there are situations. 60,000 is the credit that he has availed as against 6,000. 36,000 credit was availed as 63,000. How many examples we want? We have come across many examples of this. Mark me, but when government came out and told if you are a GST registered person and your turnover is going to be less than 2 crores, you are given an option. If you want, you file what? Annual return. If you feel not filing your annual return, you can opt the option. Very interesting to note. I am of a very humble and a personal view. If an assessee who has not made a single mistake in GSTR1 and GSTR3B throughout that 9 months, then he can opt that option. And again I am of a view, only 2 people is eligible for this exemption or option. Who are they? All 9 months who has filed GSTR1 and GSTR3B nil return, or a fellow is yet to file the return for July. But for these 2 people, definitely what errors we want. GSTR3B is such a beautiful democratic return. You put any number, it will not question you. Yes or no? Yes or no? Can I put 1 rupee in the taxable value column and 16,000 rupee in the CGST SGST column? Will it question me? It will question me? No. That is why our fellow mentioned 3 crore 46 lakh, 1 lakh 80,000. Taxable value 3 crore 46 lakhs. To the contrary, this side, CGST, 1 lakh 80,000. Where from you were? Sir, sorry sir, the 2 gross turnover number I typed here, sir. What error we want? Every single type and type of error. One number will be comfortably 5 invoices missed to be added in GSTR1. Best part is 3B they would have paid tax. Errors are left, right, center has happened. With those errors, GSTR9, GSTR9C, all this is optional and all. Assessee has to take a selective call associated with them. ITC, GST payable and output tax liability tax payable, both will be consolidated and will be presented in the last table, which is tax liability identified by the GST auditor during GST audit, and then using the digital signature of the respective GST auditor, this facility of XML file will be, a JSON file will be generated, and then a digital signature will be attached and given to the assessee. This is the whole process. Now, changes are a lot more beneficial, but in any case, my submission is 1 or 2 tables. If we push ourselves, I think we can make those reconciliation. It will be little more helpful to us. Any questions? Yes, I would take it up. I have few minutes with me.
The advances, advance received on goods or first contract.
Yes, sir.
Whether we have to say the liability.
Definitely,
And
yes.
they are not disclosing.
9, they have not disclosed. See, I would put it this way, sir. There is something called as a system computed summary. That is, system automatically will generate based on the reporting. If based on system computed summary, if it is already there in the system, in table 4F of GSTR9, where advance will get reported, that has to be cross-verified with the balance sheet, advance from customer, current liabilities number. If both matched, good. Both does not match, maybe a reconciliation warranted. Some advances are for goods, some advances for some immovable property, some advances to do for services. To the extent of services it should match, rest all reconciliation. Here itself there is a problem, warranting a reconciliation. Sometimes assessee has some great practices. We will not pay on advance and all, we will pay only when we raise invoice. Then to the extent of advance received, time of supply will trigger. When he raise invoice only, he will pay GST. For this differential period, interest is to be paid by the assessee. So my answer will be based on adequately reported, in short reported, or advances received but everything was billed before the year. Answers will change accordingly. End of the day, closing advances as per financial statement of that state.
The advance outstanding. So
Sorry?
period ended, then the power advance outstanding. That should create problem.
Outstanding at the beginning of the year, at the end of the year.
End of the year.
At the end of the year. Then that number should match with your 4F GSTR9. Or a reconciliation should be available for it.
Both the group for goods, supply goods or was
Yeah, everything. How it is reported in financial statements, I don't know. If in financial statements you have a specific entry, this is for goods, this is for services, this is for others, then you can select services and match here. In financial statement is all consolidated, then you have to have a reconciliation prepared outside the reports. As part of GST audit working file, that reconciliation will be there. Just to tomorrow satisfy, from this number to this number I matched. Possible to be done. It's a little laborious activity, I am not denying. The 24 crores advance that is there on the credit side of, that is on the current liabilities, and 21 crores is reported on the on the GSTR9 4F. Driving a reconciliation over here for this 3 crores will result, it is not 3 crore, it is 36 crores minus 33 crores, which is that 3 crores. So it is challenging, sir, no doubt about it. So how we take up that advance, how we adjust it, what need to be adjusted, he has not adjusted, what to be adjusted, he has not adjusted, some adjustments he did in next year that need to be given effect, it breaks head. So call need to be taken. Anything else? I thank you all for effective and patient listening. Thank you.
On behalf of our fellow participants, I express our sincere thanks to Mr. Ganesh Prabhu for his valuable inputs with regard to base of supply and also the GST audit costs. Once again, thanks.
Thank you, sir.